Good afternoon, ladies and gentlemen. On behalf of Wealthy Nivesh, I extend a very warm welcome to all of you to Nivesh Milan Dubai 2025. It's truly heartwarming to see not just our clients and partners here with us today, but also our friends and family who have joined this special afternoon. In WN, we have two kinds of patrons: friends who became clients and clients who became friends. We kept on getting business, which was guided by two reasons. These are our guys. Let's start business with them. And these are young and upcoming guys. Let's put our money with them. So let me first welcome our patrons who have flown in from India for this event: Mr. P. Srinivasan and Mr. Kailash Srinivasan, Mr. Rajesh Seth, Mr. Jitendra Jaiswal, Mr. G.S. Anand, Mr. Amit Vip and Mrs. Shruti Vip, Mr. Sanjay Goyal, and special thanks to Mr. Paresh Ganatra for adding a touch of glamour to an otherwise financial event. It was a sheer joy listening to your such an inspiring journey of navigating from financial markets to Bollywood yesterday. From friends and family, let me welcome Mr. Ankur Tiwari, Mr. Mohit Yadav, Mr. Vishu Garg, Mr. Pranay Jain, Mr. Shrey Goyal, who again flown in from India for the event, Mr. Himanshu Dwivedi, Mr. Amitabh Dhaban, and Mr. Shabir. A warm welcome to all the patrons from Dubai who have trusted us with their lifelong savings. We are blessed to have acquired 40 HNI and UHNI families in last 5 months from Dubai. I would like to welcome Mr. Ashish Mahajan and Mrs. Mahajan, Mr. Gautam Patel being represented by his son Mr. Akshay Patel, Mr. Prakash Goenka, Mr. Chirag Sejpal, Mr. Ashwani Kumar Gupta, Mr. Ashwani Kumar Zulfina, Mr. Satpal Garg, Mr. Jitendra Gehi, Mr. Makram Prabhavkar, Mr. Neeraj Gupta, Mr. Abhishek Atreja, Mr. Saravan Mundyani, Mr. K.R. Eswar, Mr. Devesh Jain, Mr. Chetan Kapoor, Mr. Myron Dasa, Mrs. Radhika Goyal, Mr. Vijay Kumar, Mr. Namit Rajagharia, Mr. Banu Das Parab, Mr. Barun Agnihotri, Mr. Shekhar Sinha, Mr. Pawan Arya, Mr. Mayank Bhargava, Miss Jyotsana, and Mr. Sachin Verma, Mr. Mahmad Palkar, Miss Madhuri and Manish Chandana, Mr. Syed Hussain, Mr. Shankar Mohan, and Mr. Himanshu Dwivedi. We are especially grateful to all of you. Your trust and support have been the foundation of our growth, and we are deeply honored by your presence today. This afternoon is also very special one for us because Wealthy Nivesh completes 3 successful years today of its journey. In these years, we have grown steadily with your faith and encouragement. And today, I am proud to share an important milestone. We have successfully set up a subsidiary in UAE. This marks a new beginning of Wealthy Nivesh as we move closer to our NRI community here in UAE and strengthen our presence internationally. With these milestones and your support, we step into today's discussion covering India's growth story, asset allocation, taxation, valuations, alternate investments, gift city, and succession planning. Together, we hope to create not just conversations but also a community of shared growth. start this afternoon, we will hear about the journey of wealthy Nivesh and the big picture on India's growth story for the next 5 years. To share his vision, I invite Ankit Garg, CEO of Wealthy Nivesh, to take forward us for India's growth story.
So a very warm welcome to everybody. So as Christy also mentioned, so this day is special for us in two, three manners. One is that it's our third anniversary today. We started our company on 23rd August 2022. And I always keep on saying that when I look back, it only and only looks like a divine journey. There is no logical explanation for whatever we have achieved until now. Second, we have also opened our setup in Dubai now. So these are two things, and of course, getting to meet all our clients and prospects here. So I'll be taking you through two presentations. One is on our wealthy innovation journey of last 3 years, and then I'll be taking you through uh, India's journey. So a lot of us feel that this is going to be India's century, which is more of a prediction, but I'll be taking you through some numbers, some recent numbers, which prove that India is on a growth trajectory. So first, let's start with the wealthy innovation journey. Seem to be Florence, this doesn't seem to be working. So no organization can grow big without having more and more hands. So I think the biggest achievement or growth that we feel in last 3 years is that we have been able to build a very sustainable, very strong, very professional team of professionals. So we started with two, three people only, and now we have got 25 people being part of this journey. This is our AUM journey. In last 3 years, we have mobilized 1,000 crore worth of AUM. So you can say around $110 million, which is one of the very unique stories in Indian mutual fund industry. So EMC people tells us that there is no other story which has achieved so much numbers in such a little time. Uh, 1 bips of every SIP that goes into India goes through our platform. So SIP book of India is around 20 to 25,000 crore. Our SIP book is 2.57 crore as of now. This is the expansion on product side. So we have taken landmarks as Nivesh Milan 1, which we did in June 23, then Nivesh Milan 2, which we did in Feb, and then Nivesh Milan Dubai, which we are doing today. So when we started, we had two, three products only, PMS, AIF, and mutual funds. But now in Nivesh Milan second, we had corporate FD, bonds, startup investments, unlisted shares, and Gift City products. In fact, we were facilitated recently in Gift City for being one of the first distributors in India to distribute Gift City products. And for this one, we have Dubai set up as part of the uh, opening, like we are setting up one office in Dubai. These are value-added services which we help you with through our affiliates. One is concierge services. Second is recovery of shares. So a lot of us have got hard copy shares which were never dematted. We help you with the same as well. Family and estate planning. My, Jugal will be covering this part today. Jugal Popat, who is founder of one of the biggest will making company in India, Viljini. Abroad education counseling, citizenship by investment, and then SME IPO. So SME IPO both on private placement side and if you want to have an SME IPO of yourself. This is on the product side. We have built a fully functional Android, Apple, and web portal from which you can do every kind of work related to investments. So when it comes to investment, it's about transactions, it's about downloading the reports, and it's about tracking your portfolio. So all work can be done by this app. In addition, you can also run an analytics on your portfolio where you can see how much is in mid cap, small cap, large cap, and how much is in hybrid or equity funds. You can also consolidate your outside portfolios on this app by a simple OTP. So just one OTP and all your mutual funds which are outside will be shown over here. These are our media coverages. Uh, we have been covered by media. So this was about our funding, which we did pre-Series A funding last year. So we were covered for the same by VC Circle, ABP, and Outlook Money. Then this is the news about our launch of Dubai operations. So since the time we started in 22, there have been two market drawdowns. First was in December 22 to April 23, when markets went down by 10%. The money which was invested in December 22 through us, it went up by 5% by April. So we were covered for the same by Business World. And second, recent downturn when markets went down by 15%, the money which was invested on the day when market was on the highest went down by only 3%. For the same, we were covered by ABP Live. So these are the recognitions that we have been recognized as one of the upcoming fintech players of India. These are my authored articles which I have written for HT Mint, which is the second largest business newspaper in India. So one is about uh, an investor psyche. So I'm always fascinated by biases that we all suffer from, like confirmation bias, herd bias, self-selection bias. So I wrote an article on the same topic for HT Mint. Second was how to choose your wealth manager. So obviously I mentioned all the traits of wealthy Nivesh over there. I mentioned how you should manage money. This article was more about young people. It was about that when it comes to managing your money, you can have a framework by only answering two questions. One is how much you should invest, that is your life goal planning. And second is how much you can invest, that is income minus expenses. So any youngster who is starting his career, who is into initial years of his career, his or her, can develop a decent framework if he sits answering these two questions. These are citations about market conditions, etc., where we came in Economic Times, etc. Uh, so we always believe that our idea should be to empower our clients with as much knowledge as possible so that discussions are shorter. So these are the podcasts that we have done. One is with LIC Mutual Fund CIO, Mr. Yogesh Patil, Jugal Popat, one of the most well taken podcast that we did. Then Kajad, who is chief editor of ET Wealth, which is the biggest wealth magazine in India, Economic Times Wealth. Then Mr. Mukesh Bhargav. We're very lucky that we have got his son and his daughter-in-law over here. Then Sonam Udasi, who is senior fund manager at Tata Asset Funds, and Deepak Jain, who is head of sales at Edelweiss. These are the events that we have conducted in last 2-3 years. We have sponsored IIM Kolkata Alumni Meet. We have done client networking. Nivesh Milan we did in Feb this year only, office inauguration, and then we did at one of the clubs in Mumbai. We also arranged Guru Gorang Das lecture for our clients at NSC. That was 1.5 years back. So that's about the journey. I think the biggest factor contributing to this progress, whatever we have made until now, is the trust that people have reposed in us. So as Srishti also mentioned, we have got two kinds of people who are our clients. So friends who became clients and clients who became friends. So this is about our journey. Again, thanks for all your trust. And now I'll take you through India growth story. Well, I'll present you only numbers. There won't be any perception. I'll just show you some numbers, how India has performed in recent years on different numbers. So first I'll cover those numbers on which we are going down. So by down, I mean rank is going down. If we were 10th, we have become third now. Probably no other slide will explain India's emergence as this one single and the most and the simplest slide in our presentation. So in 2000, in 1990, our GDP rank was 13. From 1990 to 2012, that is in 22 years, we could only improve from 13 to 10. But from 2012 to up till now, we are fourth now already, and we will be third in another 2-3 years. So, instead of taking GDP growth numbers 6%, 7%, 8%, this is something which gives us a relativity of our growth as compared to other countries in the world. So I was born in 1986, and at that point of time, more than half of the population was below poverty line. Below poverty line means you can't even afford proper three-course food. Right now, that number is down to only 4.5%. Now, when it comes to poverty, there is one very simplistic manner where you say ki if you are earning less than this amount, you are below poverty line. But there is more nuanced parameter which is known as multidimensional poverty, which shows apart from my financial earning, it should be about my access to health, access to education, access to clothing, access to housing. Now that multi-dimensional poverty is also down to 11.28% from the highs of 56% in recent past only in 2005-6. So within 20 years, our multi-dimensional poverty has come down from 55% to 11% only. A very hot topic in India always has been unemployment. Now there are all kinds of school of thoughts about unemployment in India. From the industry side, the complaint is that we don't have proper employable people. We don't have a skill set. We don't have efficiency. But even if we discount those kind of complaints, if we look at absolute numbers, unemployment is down to 3.2% from the highs of 7.6% in 2016. Illiteracy rate is down to 19%. So 91 is supposed to be a very landmark year in India because of economic reforms, etc. In year 91, majority of Indians were illiterate. Majority. That number is now down to 19%, but a more filtered number, I'll tell you, we are almost at universal schooling. Universal schooling means all the school going kids are already in schools. So fiscal deficit is one of those macros number which defines not only government's spending and earning, but it also has an effect on inflation, on employment, on financing rates, etc. Of course, in financial year 21, like the whole world, our fiscal deficit went almost double digit, but that fiscal deficit is now down to 4.8% only and estimated to be 4.4% only in next year, one of the lowest in the world. India's dependency ratio. So we always talk about young nation, young population more in India, etc. Dependency ratio means how many people are dependent on earning people. Again, that ratio will be down to 30% in 2050. It is already 47% from the highs of 78%. So typically in presentations, you always get to see graph going like this, but we have made a unique combination of graph going down in these slides. In good old days, there used to be a parameter ease of doing business, which was conducted by a UN appointed body, which used to tell how easy or difficult it is to set up a business in particular country. Now that ranking for India used to be 131 in 2012. Last ranking, because no other ranking came afterward, it was 63 in 2020. Now I'll take those numbers where India is going up. GDP. So our GDP from 327 in 94. So within 30 years, our GDP has become almost 11 times. So it is $4271 billion in 2025. Again, so instead of going for absolute parameters, I am again taking you to a relative parameter which tells India's contribution to world GDP. We are almost 16-70% of world's population, but certainly our efficiency is much lower than even the average of the world. So our contribution to world GDP is touching 3% now from the lows of 1.16 when economic reforms were introduced in India. So our contribution to world's GDP in percentage term has tripled in last 30 years. GDP per capita, so there is a, so UN has defined slabs of income like middle income, higher income, lower income. So we have moved to lower middle income group uh, because our GDP per capita is already around 3,000, but we will be 4,500 in 2031 within next 6 years. Total exports, again, a growing trend only from the lows of 52 in 99 to 824 in last year. And you can see it's a secular uptrend only. India's exports as percentage of global export. Again, let's take a relative parameter, how we are growing as compared to the world. So as compared to the world, we were 1.5% in 2005, just 20 years back. Now that contribution is more than twice. It's 3.3% of world's exports. Per capita GDP I have already covered. Life expectancy again to the lows of 38%, 38 years. So I believe 95% of the attendees over here will be more than 38 years. So if we were born in 1954, we won't be here. That includes me also. But right now that number is 71. Individuals using internet again. So we look at internet as, connection to Netflix. But think of an Uber driver. If he gets internet access, he gets access to formal economy. He doesn't have to, keep searching for clients. He can define his working hours. He knows that this is the rate that I'll get. So the kind of change internet access has brought to bottom of the pyramid in India, it's phenomenal. So, uh, you know, so we have some states which are labor deficit and others which are labor surplus in India. So Bihar is supposed to be labor surplus state in India. So they export their labor to other states. One of the biggest leakages for a Bihari labor in Mumbai was sending money to hometown. They will send it through unorganized channels and the commission over there will be very high. Now that work can be done within 30 seconds by using UPI. All thanks to access to internet only. Average monthly SIP. So before taking you through this slide, I'll take you through this slide. In last 10 years, in fact, in last 10 years, FIIs have been net sellers, cumulatively speaking. And you can see mostly they are net sellers only. If you look at this violet color line, still our markets are giving high returns. Why? This is the answer. 25,000 worth of SIP, 25,000 crore worth of SIP going into mutual funds every month. So when I started my career that year, the whole industry's net sales for the whole year was 24,000 only. Now I'll take you through some government welfare schemes. Why I decided to include this part also. No country can develop really until unless bottom of the pyramid is taken care of. Even I am a big time capitalist, but even for capitalist economy, you need big and big market. And if a large part of your economy is engaged in cutting wood for cooking food, certainly their productivity is not being put to best use. So in 2014, the number of bank accounts in India were 80 crore. And additional bank accounts opened in last 10 years was 20 crore. Between 2014 and 24, that number has increased to 51 crore. And we always keep in saying there is a concept of low base effect. So if 10 people are left to open a bank account, it's difficult to cover those 10 people as compared to covering 10 people when 40 people are left to open bank account. So in that sense, and again, this has again brought inclusion, financial inclusion for a large population. Now our maids can take money in their accounts directly without having to think about sharing that money with their drunkard husband. Swachh Bharat Abhiyan. So basic hygiene. Even that was not accessible to most of our people. So if we look at sanitation, now 100% of India's population has access to toilets, and that too in rural areas. LPG collection. So why I mentioned about cutting woods and cooking food by it, they didn't have access to LPG connections. And it was not only about affordability, it was also about that people were not reaching that segments. But government took a call that we need to reach to those segments, and here are the results. So between 2004 to 14, there was 40% increase in LPG connections. Between 14 and 24, it was 80%. UPI. The biggest luxury that we have in India, we don't have to carry cash anymore. If you forget your wallet at home, you can still manage with your mobile phone, provided there is battery in it. So distinct UPI transactions have increased from 70 crore to 1000 crore in 5 years only. And again, I'll take you through one relative number. In, so there is a in financial payment industry, there is a term known as instant payment. Instant payment means that payment, credit and debit should happen within a certain time frame. We have almost half of the instant payments happening in the whole world. So we were cursing just now that our population is 16%, but our contribution to world GDP is only 3%. So that means our efficiency is one-fifth of global efficiency. But over here, in spite of having just 16% population, our contribution to instant payments world over is almost 50%. UPI versus cards. So in every country, payment gateways like MasterCard, Visa have got monopoly. In India, it's other way around. If you look at number of transactions, 55 crore people in India now have access to insurance, all thanks to Pradhan Mantri Arogya Yojana. Roti, kapda, makan. So in 60s, 70s, we used to have themes of Bollywood. I always believe that Bollywood is one of the best mirrors of the society. So in 60s and 70s, we used to have poverty as the underlying theme. We used to show that, large population is struggling for something as basic as roti, kapda, makan. And the situation remains same even now. But if you look at these numbers, while in 2014, we had only 40 lakhs urban households built by the government, that number increased to 3 crore in 2024. Now I'll show you some of the government reforms and what has been their impacts on the economy. I'll be covering these PLI scheme, Make in India, GST, Startup India, and NCLT. Uh, so one of the biggest challenges for banking industry the world over is NPA, non-performing assets. So earlier in India, there used to be two, three reasons because of which bankers used to suffer a lot. One was evergreening of loans. You're not able to pay interest on the current loan, you take another loan and you pay interest on the same. Second was there was no standard definition of how NPA will be defined. So it was at the mercy of the local bank officials how whether they will, uh, you know, define it as an NPA or not. The third was the recovery mechanism was very slow, arbitrary, and there was no definition to it. Then IBC came. IBC first defined what is NPA. They defined if interest is not paid on the loan for 6 months, it will be classified as an NPA. Second thing what they did, they listed down top 20 defaulters of that time. I'll show you the slide in next slide and you will be amazed to have those names over there. They listed down top 20 defaulters and they defined that they will have time bound resolution done by a professional tribunal. Hence, from the highs of 12%, so we have covered the numbers from 2019 over here, but in 2014 or almost the same time, the NPAs in India were more than double digit, they were 12%. From the highs of 12%, they have come down to 2.3%. So what is the significance of this number? Banks have more money to give loans. Banks can be confident in giving loans also because they know that if there is default, they can recover their underlying also. So in previous avatar of recovery, which was Sarfasi Act, the recovery rate was 14%. In NCLT, it's around 40-50%. Recovery rate is against your loan default amount, how much you were able to recover. Uh, so I was born in late 80s. I was born in 1986. For my generation, Videocon used to be a very respectable name. But you can see that name over here. Many of these names used to be very respectable name. They used to call the shots. But after IBC, all of them were नीलाम कर दिए गए. अगेन परेश सर यहाँ पे हैं बॉलीवुड में देयर इज अ वेरी फेमस टर्म नीलाम कर दिया जाएगा. दे वर ऑक्शनड ऑफ एंड इवन फॉर ऑक्शनिंग देवर रूल्स डिफाइंड. There were rules defined that promoter can't come back from the back channel. Number of recognized startups. So we are one of, so in this high number 1,80,000, we are also one of the recognized startups by India. But look at the trajectory. In 6, 7 years only, from 8,000, it has gone up to 1,80,000. Unicorns. So unicorns are those companies or startups whose valuation is more than $1 billion. So there are 120 unicorns in India. Now we all can have our views that it's not sustainable, pricing is overvalued, but this is the reality. This is about PLI. So people have all kinds of views about Make in India, what is happening and what is not. I'll show you some of the numbers. So this is the input from the government side. What government did, government merged PLI with import substitution. So earlier there used to be discount in establishing the production, but now government said government gave targets to the industry that you achieve this much number of this product and we will give you this much discount. This resulted into having more and more production, import substitution, more so in technologically high segments like mobile phone, electronics, etc. So the first on the left side is about mobile phone exports from India. The second is mobile phone production in India. The third one, so in 2017-10, we were net importer of mobile phones in India. Right now, we are net exporters. We are producing more than we are consuming, so we are exporting rest of the production. Apple iPhone is supposed to be one of the biggest technological advancement for retail products under individual category. India's contribution to global shipments of Apple will be 25% in 2025. So these numbers are awaited to come, but this is supposed to be the estimated number for last year. And India's electronic export, again, you can see the progress from 2.6 in 2020 to 330, more than 10 times. Uh, so recently, people earning up to 12 lakhs in India, uh, income tax for them was made zero, up to 12 lakhs. And believe me, 12 lakhs is a respectful, decent amount to earn in India per year. The reason behind it was GST, that government has this confidence that by GST we will be able to achieve certain numbers which are required for keeping the fiscal deficit in control. So I showed you the fiscal deficit number which has gone down like this in spite of all the spendings by government on welfare schemes, by giving all the discounts in income tax, etc. And after this 12 lakh, I think 80 or 85% of the people paying income tax earlier became income tax non-liability. And it has been possible because of this only, that while in 2014-15, 10 years back only, our indirect tax collection was 5.46, it is now 22 lakh crore per year. And there are some estimates that this year it should be around 30 lakh crore. So that's the long and short about India's growth story. The idea is just certainly to convince you about Indian markets because that's where we work. But even as Indians, I think this is something that we should be proud of. And I'll share one anecdote with you. I am a pass out from IIT Delhi. So I was looking at profiles of IITians in last 30-40 years. And I could see a trend that IITians moving outside India is coming down in last 30 years. So in initial year, that trend was not that much visible, but now people moving out by default being IIT is no more the default option in India. So thank you. Thanks a lot for listening to this presentation. And I'll now like to hand over for the next agenda item. So I'll now take you through our proposition, how we build portfolios for you. What is the algo? So backstory is when I was regional head in HDFC Bank's wealth team, Aditya joined me. He was a young chap from ISB and he built an algo which was unbelievable to me. I was like old banker and I still remember I told him these numbers are too good to be true. But he persisted that you get them checked. And when we got it checked by research team of a bank, they were correct. And then we sort of analyzed all the mutual fund distributors in India, including banks, wealth houses, etc. And we came to know that there is a gap of having a prudent research in mutual fund distribution and advisory in India. So this is about the team. Professor Vikas Agarwal is our research mentor. He's one of the founders. He's Bank of America chair professor in Georgia State University. He has written some 40 research papers on mutual funds and hedge funds in America. I need some water. Then for me, I have got 12 years experience in wealth across India and Dubai. And last, I was part of HDFC Bank's wealth management team. Aditya is IIT Roorkee and ISB Hyderabad. So between me and Aditya, I am the talkative guy and Aditya is the brainy guy. So he is the one who built the algo. And Sisti heads the operation. She's also one of the founders. And incidentally, she's my wife also. So when it comes to traditional wealth players in India, they have got two guiding principles. One is customization. The second is risk mitigation. So when I used to work for traditional wealth players in India, we used to follow these two rules. We have supplemented those two rules with two more layers. One is algos driven, the other is alpha oriented. So whenever clients ask us for guidance on the returns, we tell them that we are more alpha oriented than absolute return oriented. That we won't tell you that this much return will come. We tell you that basis our understanding this much alpha we should be able to generate. And algos driven means that whatever we recommend to you is backed by an algo. So whether we prepare a review for your portfolio or whether we build a portfolio for you, it will be backed by an algo only. These are the product and services that we provide to you: mutual funds, PMS, AIF, unlisted shares, bonds and corporate FDs, startup investments, gift city, recovery of shares, SME IPO, concierge, education counseling, estate planning, for which Jugal will be covering the session, and treasury. These are the guiding principles that we follow on mutual fund selection, and some of these principles have been incorporated by looking at what goes wrong in investing. So I have one very favorite book when it comes to investing. It's called What I Learned About Investing from Darwin, where the author has drawn analogy from theory of evolution to show how you should be managing your portfolio. And over there he mentions about type 1 and type 2 error. So type 1 error is maximizing your good picks. ये अच्छा शेयर है, ये मुझे खरीदना है. Type 2 error is minimizing your bad picks. कि you should not have bad stocks in your portfolio. These two errors always move in opposite direction. So if you try to maximize the good picks, you will pick up some bad picks also. And if you try to minimizing picking the bad picks, you may end up not picking up some good stocks. Most of us, including myself up till some time back, used to focus, most of us focus on minimizing the second error, that we should be able to pick as much stocks as possible. We should be able to pick as much good stocks as possible. But author has shown that your idea should be minimizing your bad picks. And that's what we try to do over here. We do asset allocation based on investment horizon. Mutual fund selections are basis W and quant. We never ever give more than 20% allocation in single fund house. Portfolio level approach. So you started with X amount, that X amount became Y amount in 2 years. You say, I want to invest Z more. So we'll first see how Z fits into Y. And multi-cap allocation means that we get you allocated across a small, mid and large cap. This is how our algo works at top level. We have taken a data API from one of the credit rating agencies in India, which gives us 53 data points that gets fed into a W and quant algo, which is our in-house proprietary algo, which gives us selection of certain mutual funds. This is a composite score. So Aditya will say, show me top 10 large cap funds. This is that composite score. And then we will do subjective evaluation to reject those funds. And whatever is left is built into WN basket. These are the baskets of mutual funds that we recommend. This is different risk and horizons. This is the mid and small cap basket, which has got only small and mid cap. ये उन लोगों के लिए जिनका कहना है हमें लाइफ में डेयरिंग करना है, हमें बिल्कुल वॉलेटाइल पोर्टफोलियो चाहिए, ये उनके लिए है. इसके जो 5 ईयर के रिटर्न्स हैं एज ऑन 31st जुलाई, that is most recent numbers, is 31% per year. And as I told you that we are alpha oriented, the alpha over here is 9.3%. And a very obvious question is, if returns are so high, so would be the risk. But if you look at Sharpe ratio, which tells me what is my incremental return for every unit of risk that I am taking, that Sharpe ratio is 1.2 as compared to 0.8 for the benchmark. This is our bread and butter basket, which has got large, mid, and small cap. Over here, the annualized return is 27.6% for last 5 years. Again, with an alpha of 5.9% and with higher Sharpe ratio. This is our balanced basket. So when we were part of the bank, we used to give a guidance ki you should get 15 to 18% returns provided you do 100% equity allocation. Over here with 70% equity allocation, annualized return for last 5 years are 18%. And the volatility of this portfolio is less than half of Sensex. Again with higher Sharpe ratio. Now this was the what part. Now I'll show you the how part, how we build these baskets. First, we take performance parameters like rolling returns and alpha and upward and downward capture ratio. So upward capture ratio means when market is going up, how much of that trend I was able to capture, and vice versa for downward capture ratio. Between these two, we give higher weightage to downward capture ratio because we believe 100 to 80 is minus 20, but if you need to grow from 80 to back to 100, then you need to grow by 25%. So idea should be to minimize your downside so that in long term you will have higher returns. We also believe that risk and return always move in tandem. So we do rating basis risk return parameters like Sortino, Sortino ratio, Sharpe ratio, and trainer ratio. This is the most crucial step. So what we do over here, we try to quantify the expertise of the fund manager. And how do we do it? We segregate returns into three baskets. One is returns due to market. पूरे market के return आ रहे थे, मेरे भी आ रहे. So a fund manager was joking to me last evening only कि last 5 year के returns देख के nowadays everybody feels that I am a good fund manager because last 5 year returns of the market itself has been 22%. But those are more of a गंगा में आप बहते जा रहे हैं. So that should not be relevant for our portfolio. What should be relevant कि if I gave 100 rupees to Ashish Somaya, how much of that 100 rupees was put into equity and debt basis market conditions? How much of that 100 rupees was put into small and mid and large cap? And eventually where was that money invested? So first parameter is known as asset allocation. Second is net selectivity. Net selectivity means कि small cap में finally where was the money put in? So first two were evaluation steps, selection steps. Now these two are rejection steps. Over here, we first look at AUM of the fund. So we never recommend you any small or mid cap whose AUM is more than 15,000 crore. We also look at legacy and depth of the team. Legacy means same fund manager should be managing the fund for last 5 years. Depth means they should have enough number of analysts, etc. And we also, so SEBI did a liquidity test on a small and mid cap 1 year back. We have been doing it from day one. So that was the reason all our recommended funds came very high on SEBI liquidity test results. And we also look at quality of assets, ROC, ROE वगैरह क्या है जहाँ पे invest किया गया. Then we do 10 years simulation and back testing. And basis this, we make baskets of mutual funds. Like I showed you 3 baskets. Now, what is the idea behind these baskets? The first idea is uniform advisory. The second is better tracking. Uniform advisory means whether you invest 10 crore or 100 crore with us, if your risk profile and your financial objective is same, your money will go into same basket. Better tracking means if there are 100 people who have invested through us, I don't have to track those 100 portfolios separately. I just need to track my basket. If there is any change, so like we have done 3 changes in last 3 years, I will reach out to all clients. I will tell them कि sir आपका पैसा इसमें invested है. This is the action point that we should take. And because it's a very closely knit portfolio, typically speaking, people's portfolio have 15 to 20% funds. Our higher number is 10. We don't recommend you having your portfolio in more than 10 funds. Why so? Because quality control becomes very tough when you have more and more funds in your portfolio. So because it's a closely knit portfolio, so there is higher alpha also and higher Sharpe ratio also. This is WN X-ray. So those of you who are not our clients as of now, I'll request you to share your portfolios with us and we'll make a review without any expectation on our side. And how we would do it, we'll show you asset allocation, we'll show you geographical allocation, we'll show you best and worst of the returns. But we will also show you this part. Over here, we show you a snapshot of risk return profile of your portfolio in a quantifiable manner. We take risk in the form of standard deviation on x-axis and returns on y-axis. Then we first plot the benchmark. Now benchmark can be standard index also, it can be blended also. Blended उस केस में कि अगर आप कहते हैं कि 30% इक्विटी है 70% debt hai, so why should Sensex be my benchmark? Then I'll make a benchmark which will be having same ratio. And then we plot your portfolio. So you can see on live basis how your portfolio is placed as compared to benchmark on risk return parameters. And then we plot all the underlines. So you can see right hand side top quadrant high risk high return, left hand side top quadrant low risk low return. So high risk high return is equity funds, low risk low return is debt funds. But if you look at red one, it has got very high risk but very low return. So these are some of the insights that we share with you. These are the PMS and AIF that we recommend to you. But being Dubai clients, we will be covering taxation on mutual funds for Dubai based residents in India. I think for you guys, mutual funds make more sense because mutual funds become more tax efficient. These are beyond equity AIF. So if you want to invest in products which don't invest into listed equities, you can have a look at these products. My favorite one is ICICI Office Yield Optimizer, which invests into commercial properties. And the guidance, so I'm using the term guidance, there is no guarantee. The guidance of returns over there is 15 to 17% basis the historical returns that they have been able to generate. Then other two are real estate finance funds, which gives money to real estate projects. Those are credit kind of products. And OYO, ICC Office Yield Optimizer, is more of equity kind of product because they take exposure to the project. And then others are private credit funds where you get 12 to 16, 17% kind of returns. These can be alternate to both equity and also to debt funds. These are accredited products. So if you take a certification of accreditation, which our team will help you with the same, so your minimum ticket size requirement from the regulatory side comes down. So like AIFs are required to have 1 crore minimum investment. By taking this accreditation, you can invest as low as 25 or 50 lakhs. Pre-IPO funds. So these two funds that we recommend to you on pre-IPO are promoted by setups which used to have IPO advisory. So they know companies in and out and they will manage your money. Historically speaking, with a big disclaimer that history doesn't need to repeat itself, historically speaking, they have been able to generate 40% kind of annualized return. When it comes to unlisted equities, there are two major challenges that are faced by investors. One is liquidity, the other is price discovery. So what we do for liquidity part, we only recommend those unlisted shares which are very much liquid in the market. For price discovery, we do price comparison with their listed peers. So like for NSE, we will do comparison with BSE. Then we have got a startup investments in collaboration with an affiliate. Over there, you can invest as low as 3 lakh rupees per startup. Gift City, again a very relevant topic for Dubai-based NRIs. Through Gift City, all your headache of transferring money to India, bringing money back to India, having an INR account, etc., are taken care of. So there are chiefly 5 benefits of investing through Gift City. One is Indian jurisdiction. Now, as Indians, we have more comfort in Indian jurisdiction. Over there, we can fight with the government. The second is global exposure. So through Gift City, also you can have access to global products. The third one is tax-free exposure. So sitting over here, whatever you invest through Gift City won't have any tax incidence on Indian side. The third one is cost optimization. Typically speaking, over here, if you want to invest in global mutual funds, you are charged 1 or 2% entry fee. We have option to charge you up to 5% in Gift City products, but we get it waived for you. And fifth one is fully repatriable. You don't require any 10CA, 10CB form, any declaration by CA, nothing. So Shubham, we are reducing your work. Now a very common um, statement given against investing in India is dollar and rupee depreciation. Okay, why should we invest in India? Our rupee eventually will depreciate. For last 10, 15 or rather 20 years, annualized depreciation of INR is between 2 to 3% only. And let me take you even higher. Let me show you dollar returns of these Gift City products for last 5 years. 22%, 24%, 18, 30, 22, 22, 24, 25, 26, 22, 10 and 19.6%. So recently we were visited by one of the DIFC firms, in India for having a collaboration with us for sourcing clients jointly, etc. And I asked them, I just wanted to validate what I knew already, what kind of returns you are able to generate in dollar. So the exact words were 10 to 12% निकालने में खून निकल जाता है. And over here, by investing into your home country, you're able to generate 15, 20% plus kind of returns. This is our operational framework. We typically, when we reach out to you to give you presentation on our proposition, we ask you to share your portfolio, your existing portfolio, because idea is to showcase you apple to apple return and to showcase you our expertise. Basis that, then we make a customized portfolio for you. We have a fully functional app, as I told you earlier, from where you can do everything yourself, but we assign an RM to you. All the payment processing is done by Bombay Stock Exchange and Indian Clearing Corporation. And we do monthly basket review, and in case of any unforeseen development, we reach out to you. So now I'll tell you when were the 3 times when we did changes in the portfolio. The first one was when one of the mid cap funds that we recommended initially was not performing, so we put a hold call to it. Second one when one of the fund houses that we recommended had a run in with SEBI. On the same day, we reached out to all our clients. So we have clients who were our clients at that point of time also. So you can take testimonial from them. We reached out to them and we got them shifted to other funds on the same day. In hindsight, that fund house AUM has grown from 70,000 crore to 1 lakh crore. But since that day, all their funds are underperforming as compared to earlier when all their funds were overperforming. So we have a clear-cut blacklist of mutual fund houses where we never recommend you to invest any money because of their history of running into some regulatory issues. These are media coverages. These are the client testimonials. The most relevant is Mr. Gulistani, who is former HR head of Altaya Group, who's our client for last 10 years now. He was my client when I was in Dubai. He was my client when I was in HDFC. And now he's one of the first clients in Nvesh as well. So that's the long and short of it. Me and my partner Aditya are here in Dubai till 2nd September. So we'll be very happy to meet you guys in person, one-on-one or online during this time. So for the same, you can reach out to either me or Aditya or any of our staff over here. We have got Florence over here. We have got Arushi and Hitanshi and Namrata and Siddesh. So thanks for joining us. Thanks a lot. Now I'll hand over for the next agenda. TRC. So next session is about TRC. TRC जो मुझे लेनी है वो सब मैं बाद में बताता हूँ. So 2-3 small points to make over here. Those of you who are interested in availing TRC, we have got Shubham over here. Shubham will be taking session also. But if you want to have a meeting with me or Aditya on TRC, how you can avoid mutual fund taxation in India, we'll be very happy. Also, we have put a checklist on your desk. So you can mark a tick over there, which all products that we will be discussing over here, attracts you. And we will be very happy to have a one-on-one discussion on the same. Also for our clients, we have got a small goodies. So even though our team will be reaching out to you, but in case they miss it, please remind us. And with the speakers also, like we have got Ashish over here and other speakers. If you want to have later on one-on-one session, one-on-one discussion, we'll be very happy to arrange it. Thank you. Thanks a lot. So now we have got Ashish Somaya. He has got one of the best presentations in Indian mutual fund industry, which is on asset allocation. He has got some of the most interesting insights to share with you. Thank you.
Was this? This also? is working. Hi, good evening, everyone. Can you hear me? So, I have never felt so important because I go on a lot of media shows, etc. But I've never been strapped up with three mics. So I'm feeling very important because uh, it just shows how important it is what I'm saying. There are three mics which are capturing everything which I'm saying. So thank you very much, first of all, Ankit and Aditya, and everybody at Wealthy Nivesh for organizing this event and inviting me here. And many thanks to all of you because you're choosing to spend your Saturday evening out here. I have come this morning, this afternoon actually. I came specifically for this event, and after the event I'll be going back. So you had the choice because you are choosing to spend your time here. I didn't have much of a choice because if Ankit tells me I have to go, I have to go. But I'm happy to be here. So, I think in terms of the format, what I have been told is that I have to speak for 15 minutes. I just realized 2, 3 minutes I have wasted, but I have to speak for 15 minutes because there is no chance that you allow the speaker to gloss over anything. So what I'll do is that, first there are 4, 5 slides that I want to share with you. This presentation has 70 slides. Okay. I'll share only 4 or 5 of them with you. I'm not going to talk 70 slides. Uh, and the few things that I want to share with you is, I'm very conscious of the fact that all of you are in a global, you're in a global location by virtue of being been asking this for 7, 8 years. I have gone, I have because क्या है कि you have the choice of inviting anybody else, right? So if you're not interested, why will you invite me? So if I'm invited, I know you are going to talk about stock market. And still I ask this question, despite knowing that it's a futile or a wasteful or a stupid question, I still ask it because you may or may not hear me or meet me. But in 7, 8 years, wherever I have gone, I've always asked, do you invest? If I ask a question, how many people raise their hand? How fast for full? It tells me a lot about what is their need. When I ask 3 times also, people don't raise their hand. It's like कि भाई हम भूलने का ट्राई कर रहे हैं तो क्यों दिला रहा है हमको कभी कभी लोगों का खराब होता है उसमें क्या है market mood, because Ankit already spoke about so much of statistics about India's market, but then why am I talking about stuff like mood? Your mood reflects your emotion. So why am I talking about the mood? The reason is because stock market obviously is fully related with economics and with finance, correct? So if stock market is absolutely a subject centered around economics and finance, then why am I talking about stuff like आपका mood कैसा है? The reason is simple. The reason is because I don't know how many of you have noticed or not. I don't know. It's such a syndrome. Economics meaning research. Psychology study ब्रिटेन को स्टडी कर, that also you can give no. But why is it that the Nobel Prize in economics has to be given to somebody who studies psychology? Reason for that, and it is actually a massive contradiction, because the economics have been taught, or which I have also economics, that human beings are logical. Correct? What is the biggest proof of this? The economics which we have been taught, it says that when the price goes down, the demand will go up. ऐसा सीखा है ना? And when the price goes up, the demand will go down. उसका सबसे बड़ा manifestation है that that's why they say that human beings are rational and logical, meaning that human beings will always do what is जो उनके स्वार्थ में है. Human beings will always do what is optimal for them. They will always do what is beneficial for them. They will always do what is easy for them, convenient for them, what is going to give them maximum value. So economics का assumption तो ये है कि human beings are rational and logical. Then, and you understand that emotions have nothing to do with rationality and logic. Correct? So actually the economics which was taught to you, in that the underlying assumption is that human beings are rational and logical. But economics का Nobel Prize उसको दिया जिसने बताया कि human beings are emotional and psychological. तो बहुत साल पहले किसी को Nobel Prize मिला था ये बताने का कि human beings are rational and logical. 60 साल के बाद किसी को Nobel Prize मिला, उसका क्रॉस क्रॉस पहले वाले ने गलत बोला था, तो उसको भी मिला. What is the reason for this? The reason is because your success depends on your mood. Success depends on how you control your emotions, right? So for example, Mr. Buffett, who's the most famous investor, he said, be greedy when others are fearful. Sorry, you speak loudly. As I go along, the voice will go up, don't worry. So Mr. Buffett said that fearful and be fearful when others are fearful. दोनों गलत है. B, okay, that is also wrong. The most important word is others. Because he said, be greedy when others are fearful, and be fearful when others are greedy. There's an even more difficult question. Who is others? बताइए, who is others? Investors. Acha, before you, I mean, you might find it difficult to say this. You may not be so blunt. You may not be so forthright. But most of you are thinking, मेरे को छोड़ के बाकी सब others, right? That's how people, जो मतलब, say, I'll tell you the reality. Unflattering truth, जो आपको आईने में दिखता है वही others है. बफेट साहब तो नहीं है पक्का, right? And it's a fact. I'll tell you why. See, in recent times, Aditya is going to ask me a lot of questions on asset allocation, so I'm just building for that, right? In recent times, the in recent times when what others did mattered a lot, and in recent times when our emotion or psychology was really tested. ऐसे तो I've been around for 26 years in the market. Times what everybody will relate to is 2020, right? Sometimes people got most scared about their investment. So what happened in March 2020, obviously, COVID came. What happened in March 2020 is that in a span of about 3 to 4 weeks, the stock market gained nearly 38%. 70%, it was like bloodbath, correct? Now, when will the price of something fall 40%? Meaning, I have seen stock market falling many, many times. I have seen 60% down. But when I saw the market falling 60%, it took the market 1 year to fall that much. We have seen worse, but it has taken long period. But we have never seen it falling 40% in 3 to 4 weeks. Now tell me something, when will the price of anything just keep falling one way in a span of 3 to 4 weeks? It's when everybody wants to sell, and buyers are either not buying enough or not buying or delaying their buying, right? So everybody wants to go out of the door, but the door is half open or somebody is resisting from outside, anything of that type. Now, why will everybody want to sell? You know, like in Bollywood, in Hindi, there was this movie, says इस रात की सुबह नहीं, ऐसा मूवी का टाइटल था. It's almost that, right? कि मतलब निकलो यहाँ से, meaning whatever price you get, you're okay if I mix bit of Hindi, right? Yeah, because उतना English मेरे को भी नहीं आता है. So when will the price fall 40%? When people want to just sell anyhow, मतलब जो भाव मिला वो लेके निकलो, right? और गिरेगा तो, you know, and a lot of time people say this, no, it will fall a lot more, I'll buy later, but right now I want to sell. Okay, so when will everybody want to sell? You know, it's almost like abhi boss, we are the next dinosaur, this is where the day of reckoning has come, this is where the world ends, so now we have to just get out. So, you know, when these kind of scenarios come, you will look at the television and you will ask around people, and, you know, you'll call up Ankit, you'll call Aditya, and, you know, you'll say, what is happening to my money? So then, you know, people will say pretty much like, you know, vaccine will take 10 years. You know, in 1918, there was Spanish flu. Do you know what happened? In 1992, there was plague in Surat. Do you know what happened? In 2003, there was a SARS epidemic in South Asia. So people will give you all kinds of horrible analogies. Basically, you know, it's like world is coming to an end. So this is why the market is falling. That's the explanation you will get, that we all are becoming dinosaurs. So you have to get out. Now, why did I say emotion or mood or why others matters? I'll tell you why. This was March 2020, where you agree that pretty much the scenario was that now, you know, things are looking horrible. You just fast forward 17 to 18 months, huh? Not much. I'm not talking 5 years. You know, wealth managers are notorious for talking 5 years, 10 years, and 15 years. I'm only telling you 17, 18 months from March 2020. By the time we went to October, September 2021, do you know what happened in September 2021, October 2021? In March 2020, the Nifty had fallen from 12,500 to 8,700 or something like that. In the next 18 months, that 8,700 became 18,490 in 17 to 18 months, right? So in 17, 18 months, it went up 2.25 times. That is also an extreme, no? So again, you will call, you will watch TV, you will say, what happened? Why is this making new highs? So same guy who said world is going to come into an end, he'll come on TV and say, अभी हमारा अमृत काल आने वाला है. So it's, you agree it is almost schizophrenic, right? अरे भाई अभी तो तुम बोल रहे थे दुनिया खत्म होएगा, अभी तुम बोल रहे all trees will grow to the sky. So you tell me what has changed? What changes? Did anything change? More than the numbers, more than the you know, economy, more than corporate performance, what actually changes rapidly is just your perception of what is going to actually play out, right? In one scenario, off-white starts looking yellow to you, and in another scenario, off-white starts looking snow-white to you. Oh, hey, off-white, right? It's just that the perception, perspective, or the mood actually changes. And you know why it changes so much? Like COVID, I gave you is an extreme example, but now I just want to give you 2, 3 examples. And you know, this is more like a compendium for me. So I don't want to bother you with so many slides. I want to show you just 3, 4 things. So let me get to that very quickly. Yeah. I started off by telling you that, you know, I know that a lot of you have the choice of investing all over the world. And I know all of you are by definition non-resident Indians, right? And whenever we meet non-resident Indians, their biggest concern is that the rupee keeps depreciating. And you know, till you don't talk about rupee, I mean, I'm painfully conscious that if I don't get the rupee out of the way, you will not be able to listen to what I'm even saying, right? It's a block. But I just want to point out to you, somehow this color scheme is not great, but on top, the green one is India's BSE 500. And on top of that, you read it is percentage annualized growth rate in US dollars. So this factors for depreciation of the currency. All these numbers are reported in dollars. Now, for a moment, if you haven't read this, if I ask you which is the best performing, before I go to the slide, this is just a cover, just ignore this. Which is the best performing stock market in the world in dollar terms in last 20 years? USA or any other? Sorry, China. Anybody else has any other guess? Sorry, China. Okay. So this is the data. 20 years, 15 years, 10 years, we'll read right to left. The one in green is BSE 500. And again, I'm clarifying it is stated in dollars. In last 20 years, India's dollar return is 10.6% compounded. US is also 10.6% compounded. China is 7.9% compounded in last 20 years. Okay. And then you read 5, 15, 10, 5, 3, 1. You will find that India is consistently either the best performer or second best performer. In between, you will find Taiwan definitely. It's not a comparable market. The reason is because here India's index is 500 companies, meaning it covers every sector of the economy. US is also 500 companies. It covers almost every sector of the economy. Whereas Taiwan is semiconductor and tech predominantly, and it has delivered bulk of its return in the last 3 to 5 years. But if you go as far as 15, 20 years, the best performing stock market in the world in dollar terms, one of them is consistently India. Okay. And briefly, because most of you said China, very briefly, without taking too much time, I just want to tell you two or three things. Every time you switch on the TV or meet a wealth manager or a global fund manager, and by the way, because probably you may not know, we are one of the largest FIs investing into India. Our business in India is smaller than our global business actually. Even here, if you were to meet any of the top private bankers and you tell them you want to invest in India, one of the funds is likely to be a White Oak fund. Okay. But anyway, I'm saying this because I speak to foreign investors quite often. And anybody you meet, the first thing they will say is that China is cheaper, India is expensive. Anybody who follows the market must have seen this. So they'll say that their market is 7 times PE multiple, India is 22 times PE multiple. So obviously India is expensive. That is the still photography. If I tell you something that this is 7 times, this is 22 times. So still photography will suggest to you that 7 times is cheaper, 22 times is expensive. Obvious. But that is still photography. What does the moving picture show for last 20 years? The moving picture for last 20 years shows that the 22 times wala is consistently outperforming the 7 times. You understood? So these PE multiples and these returns are generated and PE multiples are paid not for sasta and mehenga. Any country where there is democracy, rule of law, judiciary, corporate governance, respect for minority shareholders, those markets will always have higher PE multiple. And it is not at all necessary that if there is economic performance translates to corporate performance. And it is not at all necessary that if there is corporate performance, it translates to return for shareholders. It works in India and America, doesn't work in all parts of the world. I'll give you a simple example. You gave me an example of a country where you are assuming that their economic performance would have resulted in corporate performance. But what if the economy is heavily dependent on government interventions or on public sector enterprises? Then will the economic performance result in listed companies' corporate performance? Answer is no. What if there is corporate performance, but there are no strong regulators or no great regard for minority shareholders, or those companies are not conscious about their capital efficiency, right? So India and US, these are two countries which are test cases where economy results in corporate performance and corporate performance results in stock market performance. And all of you as investors are not interested only in economic performance. You are more interested in the fact that economic performance should translate into stock market performance. And India has a very, very long history of that, right? So this is our long period average, just last couple of minutes. This slide is same thing put differently. In that it was saying that last 20 years we have done 10% compounded, that was in dollar terms. And this is a longer history. This is 30, 35 years since India's liberalization, since the time the stock market opened up. right? Since the time the stock market opened up, what this says, it, the gray line, it says India's nominal GDP growth is 12.5% compounded. It says nominal because it's 6 to 7% real growth and 6% inflation. So it says India's nominal growth is 12.5% compounded. Then the second part, which I said, the green one, it says Sensex EPS. What it means, it says that the gray line which shows that nominal GDP has grown, the rate at which nominal GDP has grown, at the same rate the earnings of listed companies has also grown. That's why I was making the point that economic performance is translating into कॉर्पोरेट परफॉर्मेंस बिकॉज जिस रफ्तार से जीडीपी का ग्रोथ हुआ है इजाफा हुआ है उसी रफ्तार से कंपनियों का मुनाफा का भी इजाफा हुआ है एंड देन व्हाट इट शोज the blue one says the rate at which economy has expanded, corporate profits have expanded, and the blue one says the rate at which corporate profits have expanded, at that rate the Sensex has also compounded. Okay, you understood this? So 11.7% is Sensex compounding plus dividend yield. So 13 to 14% is the rate at which the Sensex has compounded. So we're blessed to be in a country where if you do nothing, every 5 years the index, approximately every 5 years the index doubles the money. Why I'm using approximately and average and all? Because when there is a teji, it happens in 3 years. And when there are bad times, it is 7 to 8 years. But on average, every 5 years, the market itself doubles the money. Okay. Now tell me something that if on average every 5 years market doubles the money, how many people you know whose money actually doubles every 5 years? One, two. Sir, आपने आधा हाथ उठाया मतलब you are not sure, or you are asking her first. Ma'am, you told him to raise the hand. You said half hand only. So 2.5 hands, and some another 2, 3 on second thoughts. Anyway, that's not the point. This is the rate at which the market has done it. But why we are not able to do it in every portfolio? I mean, why clients don't have it in every portfolio is because of what I started with. The emotion is what matters. And why emotion matters, ये जो लाइन है ना, ये ब्लू लाइन, ये सेंसेक्स का लाइन है, ब्लू लाइन. वो ब्लू सेंसेक्स का लाइन है ना, दैट इज एनुअल, एवरी ईयर का मूवमेंट. अगर आप डेली मूवमेंट करेंगे तो ऐसा लगता है. राइट नाउ पीपल आर वरीड अबाउट द टैरिफ वॉर, right? So now you see, now you are worried about tariff war. I can tell you every year what you've been worried about. मतलब ये क्या बोलते हैं इसको, सेम स्क्रिप्ट है. I mean, the plot is the same, the script and character keeps on changing. In 2020, you were worried about COVID. In 2021, you were worried about US interest rate. In 2022, you were worried about Ukraine war. It will become third world war. Then oil went to $129. Then you are worried about Silicon Valley Bank. Then you are worried about whether BJP will come to power or not. Recently, you are worried about tariffs, right? So what happens is that in reality, in 30, you see any time frame, it is 14-15% compounded year on year. But what happens is that every year from the top, market falls 15-20%. You know what this chart shows? It's broken into every year, and it says that the blue colored stuff, the blue bar, the blue colored bar tells you that in the year from the highest to the lowest point, how much market fell. And the green bar tells you, forget intra-year, from 1st Jan to 31st December, where did the market actually end? So long term is 14% compounded, but every year from the highest point, once market falls 15-20% from the top, गिरता ही है. And this is Nifty. See what happens if you're in small cap. The average fall is 30%. So small cap का long period average will be 17-18%. So long period compounding is 17-18%, but हर साल ऊपर के level से एक बार 25-30% गिरता है. Okay. Now the last thing which I want to share. This is why. Now, have you been on a roller coaster? All of you have been on a roller coaster. When the roller coaster is going up, up and up, what is your emotion? How do you feel? You feel excited, right? When it's going up, It goes higher and higher and higher. At some level, it cranks the gears and goes up further. अब जब आपको लगता है रुक जाएगा तो gear का आवाज आता है, फिर और ऊपर जाता है, right? And when it's like, if you are in Hong Kong Disney, you will be able to see the whole ocean. There will be wind in your face. You'll be saying, oh देखो मेरा friend नीचे है, उधर जाएंगे, उधर खाएंगे. You know, you will tell your wife or your partner, great idea, we should do this once in a year. Thanks for getting me here. You know, that's your emotion. Now, when you are most excited at the peak, खुश है आप, उसके बाद क्या होता है? उसके बाद what is your emotion after that? You will tell the same person, तुम्हारी वजह से आया मैं यहाँ पे, अगले बार मेरे को लाना मत. And when it is hurtling down, you'll be like, धरती फटेगा, अंदर चला जाएगा, ये रुके तो मैं निकलूं यहाँ से. And अगली बार कभी नहीं आऊंगा मैं यहाँ पे. That's how you react, right? So this is what happens. When Nifty is 26,000, no, everybody is like Apunij Bhagwan hai. And when it is going, see kya, in this year, you have seen 26,000 on Nifty and you've seen 21,700. At 21,700, you will call Ankita and say, अरे पहले क्यों नहीं निकाल दिया पैसा? At 26,000, you will tell him, अरे small cap में लगाने का, तू इतना डरता क्यों है? Right? So it's see, the long history is absolute maths. You agree with me? This is only maths. This complete mathematics, right? This is the mathematics which is on which all the investment is predicated. But don't you think this is very simple? It is actually like this. It is actually like this. If you know, most of the people in my industry, if you watch them, you feel, यार कितना intelligent है, ये नहीं करता था तो rocket चलाता था ये. Right? That's how complicated it sounds. But it's only predicated on this math. But what disrupts your ability to stick to the math is this. वो सीधा नहीं जाता है. Right? So what happens? At the bottom, you feel like ये रुके तो मैं निकलूं यहाँ से. And at the top, what do you feel? अपन तो इधर ही बैठे और ऊपर जाने दो. So the point is that now he will ask me questions about asset allocation. What you have to do is that you have to calibrate. Right? When it's at the top, you don't get carried away. You don't see. In 2020, we were all thinking that we are dinosaur. Correct? Now I ask you, who is others? So the secret of success is not to be part of others. तो 2020 में जब बर्बाद है सब, तब कौन खरीदेगा आप बताओ मेरे को? Not the person who is, it's not the person who has no fear. It's the person who has fear. It's a person who accepts कि हाँ ये सब जो बोल रहे हैं सही बोल रहे हैं, लेकिन जिसका दिमाग में एक खिड़की खुला है कि भाई दुनिया का हिस्ट्री ये बताता है कि अब तक तो हम डायनासोर नहीं बने. Correct? And who will start selling at the absolute, like, you know, when things are looking heady and great, who will start selling at the top? Say, yeah, it's looking good, ये लोग बोल रहे हैं अमृत काल आएगा, लेकिन कल सुबह तो नहीं आएगा ना. See, trees don't grow to the sky, right? So world doesn't come to an end and trees don't grow to the sky. The reality is always you need to calibrate. What do human beings do? The biggest mistake we make is we are binary. We are good or bad, right or left, black or white. But बड़े बुजुर्ग ने क्या बोला है, दुनिया गोल है. And in English they say the world is gray. There's no black. I mean, I'm not in a good position to say that today, but the world is gray. It's not black or white. So you need to calibrate. When you think that, you know, when you think that now you are the best fund manager, why do I need to ask anybody? Then you need to pull back. And when you think that this is just not the place to be, then you need to, yeah. So it's very counterintuitive, but I hope I've shared some food for thought. Thank you for listening me out. I'll hand over. ये सब गैजेट निकालने का कि रखने का? It was very scary. I thought you must be having some button. If I say something wrong, you'll blow it up or something. Very scary. We can stand. You can still blow me up. Sorry. You can stand. I've taken more than 15 minutes so that you ask me less questions.
Um, so thank you, Ashish sir, for beautifully setting up the context and such beautiful insights. And
Sorry?
is it fine now? And you started with a very beautiful point that about fear and greed. And about 3, 4 months back, when my team was telling me, sir, clients are getting jitterish, the portfolios are little down. So I told them that we are not in the business of just numbers, we are in the business of managing fear and greed.
Yes,
And
of
if we
course.
do that well, we are doing a great job. So, as wealth managers, we always think about asset allocation.
Yeah.
And our job is to recommend the right asset allocation based on the client's risk profile and their goals. And but there is no set rule to it or a set formula. It's a very personalized concept. And someone with very huge assets, and like Rakesh Junjunwala used to say, even if my wealth goes 30%, 40% down, I'll drink the same whiskey, I'll have the same cigar. But someone who is building the wealth brick by brick,
Yeah.
what role does asset allocation play in for those investors?
So, Aditya, you said a very important point, which is that, needless to say, that it's a personal, from person to person, it will vary. But obviously, we are talking here to a sophisticated audience. They understand investing, I guess. And obviously, we cannot talk person to person. So I'll take the liberty of making a couple of generalizations. Okay. Now, barring for barring individual circumstances, since I said I take the liberty of generalizing, I would say that let's make a couple of assumptions. Let's say you are talking about an investment portfolio on which you are not dependent for your bread and butter. Okay. So that's the only disclaimer.
Correct.
Now, in my worldview, if you keep this disclaimer out, if you keep this disclaimer in force, in my worldview, there are only two types of people. One is people who are 100% equity investors. Meaning, what is the assumption? Who can be 100% equity investor? Is somebody who does not lose sleep if the portfolio falls. Like you said, Mr. Junjunwala, he's the epitome of that. Somebody who doesn't lose sleep if the portfolio falls 30-40%. So how many of you would say that you don't lose sleep if your portfolio falls 30-40%? 1, 2, 3, 4, 5. Okay. So what happens is that I recently wrote an article. I said that to be an equity investor, either you need to be Teflon coated. If you're not Teflon coated, you should at least be gold coated. What it means is that if you are somebody who believes all the mathematics I was saying and who is generally not emotional when it comes to investing, okay, if you're somebody who believes all the maths which I said, and you are somebody whose emotions don't get evoked when your portfolio falls, then you can be 100% equity investor. Then you don't need to bother with asset allocation. But if you are somebody whose emotions get evoked when your portfolio falls 30-40%, then you need to be careful because people make mistakes. I mean, in business, in life, in investing, people make mistakes when they get emotional. मतलब investing क्या लोग शादी कर लेते हैं तो मतलब right, so people make mistakes when they are it's just a joke, I'm married. It's just a so if you are somebody who cannot curb your emotions when your portfolio is down, then you cannot be 100% equity. Then you need to go through the process of understanding how much downside can you tolerate, and if there is a limit to how much downside you can tolerate, then you must accept the fact that your upside also will be calibrated accordingly. That is the important thing too. Like if you're on a roller coaster and you say कि roller coaster कभी भी 20 फुट से ज्यादा नीचे नहीं जाना चाहिए, तो फिर उतना ऊपर भी नहीं जाएगा ना वो. Correct? So it's very important that you understand this. Like individual asset allocations will differ, but broadly speaking, there are only two.
Correct.
Right?
And you manage a multi-asset fund of more than 3,000 crores. And it's been one of the best performing fund over the last 1 year. Generated about 15% when the markets have been really flattish.
Stock market return is zero. Yeah.
So how were you able to achieve that when the market return was zero, your fund was able to generate 15%? And what was your asset allocation strategy in that particular fund?
So, here also, Aditya, I should put one important thing that if a fund generates double-digit return when stock market return is zero, then the first thing I should tell you is that it will generate poor return if the stock market goes up 30%.
Correct.
Because then people will say कि भाई market 20% ऊपर है तुम्हारा fund 10% ऊपर क्यों है? So there are some funds which are structured to do. There are some funds which are structured to protect your downside. That is how it is structured. Now, obviously, in a multi-asset fund, what we do is that, we are not, see, generally, if you say now in a multi-asset fund, see what happens. If you tell people that I made a fund which invests in gold, fixed income, equity, real estate investment trust, infrastructure investment trust, silver, all these things, okay? So let's say if I tell you that a fund has been, I've structured a fund which invests in gold, silver, equity, fixed income, real estate investment trust, infra investment trust, all of these kinds of things, okay? Then the first thing what somebody will say, लेकिन गोल्ड में क्यों पैसा डाल रहे हो? गोल्ड तो अभी ऑलरेडी बहुत ऊपर चला गया है. That's the question that will come. Do you know asset allocation cannot be done if you have a solid view on any one asset class? मीनिंग क्या है, अगर आपने डिसाइड कर लिया कि गोल्ड नहीं चल सकता है तो ठीक है, मत लो, आप इक्विटी ले लो ना फिर, राइट? सो व्हाट हैपेंस इज दैट हाउ you perceive that gold will behave on its own has nothing to do with how gold will behave when it is 20% of a portfolio. You understood? See, let me put it differently. You think oxygen is important for you? Oxygen is important for us, right? So you have certain perception of what oxygen does for you. What happens when you mix oxygen with hydrogen? What happens when you mix oxygen with hydrogen? You will get water. किसने बोला ऐसा? You can get hydrogen peroxide also, and it will burn you. Right? So how oxygen behaves on its own is very different versus how it behaves when it is combined with different proportions of hydrogen. अभी अंकित ने बताया कि आदित्य का शादी हो गया. If you meet Aditya now, he is Aditya, no? If you meet him with his wife, will he be the same? तो बोल तो अलग रहेगा भाई, सेम बोलेगा तो मार पड़ेगा फिर. You will be different, no? Correct? So a multi-asset portfolio, every asset class, it's not about how this asset behaves. It's about if this asset behaves like this, then how this one will
Correct.
react. It's called a complex adaptive system. If you change something, something else is going to change. So people cannot do asset allocation. You know why? Because they perpetually have a view. नहीं इक्विटी तो ऊपर जाएगा, नहीं गोल्ड तो नीचे जाएगा, तो उसकी वजह से एसेट एलोकेशन कर नहीं पाते. Actually, what you should be doing is you should be studying the history of all these asset classes and seeing how they have behaved over a period of time, and then how they have behaved versus each other, and then find the optimal mix. So why this fund did well, for example, it may not continue to do that well, but why it did well? Because in 2023 we were buying gold when everybody was buying equity. Now when everybody wants to buy gold, we start buying equity, right? So it has two, three things. One, it works more like chemistry. Second, uh, it basically automatically ensures that you are getting out of something which has become expensive, and you're perpetually, you're never part of the others. It automatically balances your emotional impediments.
And so we could not show that chart, but Whitog has done a study on how different asset classes work together.
Yeah, it's
And
chemistry. Yeah.
and we feel that fixed income it's very safe, but there is volatility to the fixed income as well. But when you add 20% equity to it, volatility reduces. And when you further add gold and silver to it, its volatility further reduces. So that's something that we could not show, but we will share it with you after the session.
Yeah.
And so my next question comes on gold, and it's a very prevailing question. It is at all-time high. So how do you look at gold as an asset class? Is it a structural part of your portfolio, or it's a tactical call?
So we'll take the same framework which I mentioned, that either if you're an equity investor, you may be investing in US equity because you're in Dubai, you may be investing in US equity, you may be investing in emerging markets, you may be investing in India. If you're an equity investor, okay, equity, nothing can beat long equity. Why nothing can beat long equity? Because equity is actually a partnership of a business. It has intrinsic growth. Because when you're invested in equity, where the growth comes from? The growth comes from the fact that actually there are companies producing profits, and if they're doing right, the profit gets converted into actual cash flow. So equity is an asset class whose value keeps on rising, and the price keeps rising because the underlying value keeps on rising. So nothing will beat equity in the long term. Okay. But assuming that you are somebody who cannot tolerate volatility and you need to dampen the amplitude of the volatility so that your emotions don't get sparked, then obviously you will do asset allocation. And then all this gold and all the discussion will actually come. So two things in your question. One, what is the view on gold? I think that till the time people have doubts on US economy, more than US economy, people have doubts on US economic conduct itself. People have doubts on the strength of the dollar. There is geopolitics. Central banks themselves are diversifying away from dollar and looking for other currency and looking for gold and stuff. So till the time all these uncertainty remains, gold will be in play. From time to time it might come in the headlines. That is one on the view. Second is it strategy? See, what I feel is that if you don't have gold in your portfolio, you don't have gold in the portfolio, that's fine. But if you are going to do asset allocation and if you are going to put gold in your portfolio, then it better be some 15% or 20% or 10% or something like that. See, क्या होता है, बहुत लोग है ना, their portfolio is 100 crores. In last 1 year, they bought 50 lakh rupees worth of gold. Then they'll say, देखा, the 50 lakhs became 60 lakhs. It doesn't change anything. If you have 100 crores in equity, then putting 1 crore in gold is going to do nothing. Gold is ornamental. In the portfolio also, it will become ornamental only. Correct? So if you are making a financial allocation to gold, then it better be some scientific decision that you have made. And the role of gold is to reduce the volatility of your equity portfolio. Correct? So if you put 15 rupees of gold, let's say portfolio is 100. Out of that, let's say 60 is equity. तो 60 रुपीज इक्विटी का अप डाउन हैंडल करने के लिए 10-15 रुपया गोल्ड या 20 रुपया गोल्ड चाहिए. इफ यू पुट 60 रुपीज ऑफ इक्विटी एंड 2 रुपीज ऑफ गोल्ड, it's not going to play any role. At least statistically it won't play any role. You psychology feel chalo kuch kiya.
That's a very important point in every aspect. When you're building a portfolio, you should have substantial size, not too much, but substantial size so that it moves your portfolio.
It should play the role.
Because many of mutual fund portfolios that we have seen, there many of them have 50-60 funds. And allocation is less than 0.5%. So it does not add any value to their portfolios.
If you have 50-60 funds, you have a zoo.
And correct. And now moving from gold to silver, and silver historically has been more volatile than gold. And historically, gold price has been around 60 to 65 times the price of silver. If we take the last 100-year data, currently gold is at about 85 times the price of silver. So we don't have any other benchmark, but if we do a relative pricing, silver appears to be better value. So what's your view on silver, and do you take any structural positions in silver as well in your multi-asset fund?
So we do invest in silver. But I think just a couple of distinctions I'm not an expert on commodities. Even when I talked about gold, I said it is used to dampen the volatility of equity. So I'm not giving per se I don't have expertise on commodity. But two things I can say on silver. One is that since your question, the latter part of your question was role of silver in a multi-asset fund. Now we do invest in silver. But till now, whatever we have invested in silver, we were doing arbitrage because back home in India, till couple of months back, if you buy gold and short the futures, the arbitrage itself was giving us 11-12%. So we were making a lot of return just on arbitrage. So we kept running that position. 7-8% of the portfolio was silver, and then when the arbitrage went down, we got out of it. Coming to the second part, so we never had a long position on silver. We were doing trading, and we were doing dynamically hedging the position and arbitrage and those kinds of things. Second thing is that if you per se look at silver, the way I explained that gold can be used to counterbalance the volatility of equity. Silver may not be as efficient as gold. The reason being that silver has a lot of industrial use, right? So silver sometimes gets positively correlated with economic performance. Sometimes it gets positively correlated with equity, meaning that how do you use gold to reduce volatility of equity? If the movement of gold and equity is uncorrelated, or if it moves randomly, then you can use it. But silver sometimes moves in tandem with equity. So we don't use it for hedging, we use it tactically only.
More of a tactical purpose.
Yeah.
And my last question is, we always talk about asset allocation. What is your personal asset allocation? And how frequently do you change it?
So I am actually 100, I have, from 1999 till 2021, I have been 100% in equity. And in the last 2 to 3 years, I have started investing in real estate also. So I'm like, you can say, significantly in equity and some bit significant, but yeah, in real estate. But real estate also for me is a derivative of economy. See, I'll tell you the reason. In India ना पिछले 10 साल 2010 to 2020 ऐसा हो गया कि नहीं रियल एस्टेट में तो पैसा बनता ही नहीं है रियल एस्टेट में सब खराब है right so it was more a contra bet for me but ultimately my belief is that you leave aside all the nuances of India's real estate and definitely I am not talking about यहाँ का real estate is like trees are growing to the sky वैसे मैं ट्राई किया था यहाँ पे इन्वेस्ट करने का तो मेरे को बोला कि ये आखिरी घर है अभी लेने का तो ले तो मैं डर गया यहाँ पे आई थिंक ऐसे ही होता है ना जितनी बार देखने जाओ बोलता है ये आखिरी वाला है लेना है तो लो हैपेंड टू बी 3 times फिर एक हफ्ते के बाद फोन करके बोलता है आपने डिसाइड नहीं किया बोला भाई आखिरी था तो मेरे को क्यों फोन कर रहा है हाँ नहीं तो ये आई विल टेल यू नेक्स्ट टाइम सो यहाँ का रियल एस्टेट का बात नहीं कर रहा हूँ मेरा नॉलेज बहुत पुअर है बट इन इंडिया आई थिंक इट्स ऑन ए अपस्विंग इट्स लाइक ऑन अ लॉन्ग टर्म
And we also have a session upcoming on real estate in India.
Yeah, so in India it has very bright prospects according to me. यहाँ का मेरे को समझ में नहीं आ रहा है. Yeah, thank you very much.
Thank you so much, sir, for wonderful insights. Uh, Now I'll request Ashish Mahajan sir, to give a token of appreciation to Ashish sir.
My question to you is about the relation of gold to oil, energy. Yeah, and we were talking about innovation, tech innovation. Where we were talking about yeah. Yes. So, further to take it further, how do you see because Israel is having a lot of equity investment in oil or oil getting downstream or upstream industry in terms of equity. I think in that sense, perhaps having a certain percentage of allocation would also. Yes. See, there are two things in this. It depends which geography also you are in. So let's for a moment let's assume you're talking about this geography. Like in this geography, what happens is when oil goes, even the stock market and the economy starts to boom. So in this market, oil and gold may be behaving relatively in a certain manner. In India, if oil goes up, India's market does poorly and rupee depreciates, so gold actually goes up. So we have to keep the nuances in mind actually. It depends where you are, in which playground, and then you have to correlate. Because अलग-अलग countries और अलग-अलग currencies की वजह से भी the correlation keeps on changing. So if you say the equity portfolio in Middle East and equity portfolio in India, it may be different things. Most of us Indians here are, I don't know, understand that we are So, the interesting part, yeah. So I think the interesting part, in the short term, the world stock market is one stock market. Okay, in the short term, like say if you take 3 months, 6 months, or something, even 1 year, in the short period of time, the entire global stock market is one stock. But if you take period like 5 years or 10 years, then it goes back to the mathematics, which is that, and I can tell you with data. You just take two different decades, 2000 to 2010 and 2010 to 2020, two different decades. I'll give you first examples of short term. In 2000, there was a tech bubble crash. Then terrorists blew up the World Trade Center. Then US started the war in Middle East and Afghanistan. So 2000 to 2002, when US market started falling, even our market started to, India's stock market also declined. Then the market went up. Then in 2008 there was Lehman crisis. Their market declined, our market also declined. So these are two examples of short term from that decade. But do you know 2000 to 2010, if you take the entire period of 10 years, in those 10 years, Indian companies grew their earnings by 14% compounded. So India's stock market gave a double digit return. And US market return from 2000 to 2010, zero. Literally zero return. So उनका market जितनी बार गिरा हमारा market गिरा. Complete sympathy. But if you take the whole decade ultimately, their market delivered what their companies delivered, our market delivered what our companies delivered. And 2010 to 2020 completely flipped. Again, whether it is Mr. Trump's election, whether it is 2013 paper tantrum, whether it is COVID, in each of those instances, their market and our market was correlated. But if you take the decade from 2010 to 2020, they had double digit return. Our stock market return was close to zero or low single digit. In dollars, it was zero. So what happens is that in short term markets, it's emotion. In short term, emotions matter. In short term, you open the TV and see US stock market is 2% down, you will also feel like selling your portfolio. So in the short term, it is emotion. In the long term, ultimately the maths takes over the functioning of the market. What would be the reason that most governments right now are building strong position? Because sir, wherever you go in the world, it was perceived that the dollar is the global currency, the reserve currency, right? And unfortunately, they have a little bit eroded the confidence of the people by doing three, four things. One was, if you see, for example, there may be some, I'm not a geopolitics expert or a political expert at all, but there must be historic reasons why Ukraine and Russia are at war, right? There is a aggressor, there is a different, whichever, we may be on different sides of political ideology, it just doesn't matter, but there is a war. The moment that war started, the US froze $350 billion worth of Russia's dollar reserves. Russia was holding $350 billion of their reserves in US dollars. It is still frozen. So, India is शांतिप्रिय country है ना. हमारा रिजर्व महीने गोल्ड खरीदना चालू कर. Because even we have 700 billion. So out of 700 billion, I don't know the latest number, how much we are holding in US dollar, how much in euros, and how much in gold. But in the last few years, India, which has no conflict with anybody, even we are holding gold. Because the point is that people are worried that, till now we were all comfortably holding dollars. So, if the dollar depreciates, if they stop honoring some of their commitments, many things. So people want to diversify. Now, other than dollar, what other currencies are there? That's the issue, right? There may be some currencies which people don't want to trust. And that's why if you see Bitcoin also, now why people are looking for alternatives. There is something there. That's why people are looking for all kinds of alternatives. One of the alternatives is supposed to be emerging market currencies. And when US dollar is depreciating and when US economy is doing badly, emerging markets should do very well. But they got mired in this geopolitics. So eventually, if gold starts going down, eventually emerging markets will do very, very well. Because the history of the market shows that whenever US does badly, whenever the dollar starts depreciating, emerging markets If dollar is depreciating, emerging market currency will do well. They will attract money, the stock market will go up. But right now, there is a bit of a disruption because of geopolitics. Thank you very much. Thank you.
Can you start on banking? Sir, we just have a token of appreciation. I think that if you can come up and take that. So,
Thank you.
recycle.
Thank you, Mr. Ashish, for sharing such powerful insights with us. Now, we move forward to very important subject of our NRI community, NRI taxation. One key element of this is tax residency certificate, TRC, which plays a crucial role in avoiding double taxation and ensuring smooth compliance for NRIs. So, to deep dive in detail, we have with us CA Shubham Patel, founder of CSPS and Associates. Please welcome him.
Hello everyone, Namaste. It's an absolute pleasure to be here at Nivesh Milan 2025 at the most iconic city of the world, Dubai. I would like to congratulate Wealthy Nivesh for expanding their operations in Dubai as well. First of all, a big round of applause for Wealthy Nivesh. Heartfelt thanks to Wealthy Nivesh for inviting me as well. So before I start my presentation, can I have a liberty to ask you a question that from which part of India you belong from? So any Punjabis sitting over here? क्या बात है सत श्री अकाल पाजी any Marathi, Tamil, Telugu, Bengali, Kannadi? Mallus, any Gujarati? Kem cho? Yes, superb. So you are the real Bharat Bhagya Vidata. Punjab, Sindh, Gujarat, Maratha, Dravid, Utkal, Banga. So you are the real contributors for the India's growth story. So even after sitting over here, you are contributing a well for the India's growth story. So thanks a lot for doing so. And a big round of applause for each and everyone who is contributing for the new India. So एक्चुअली ये बहुत ज़रूरी था क्योंकि आपके अंदर ये भावना जगाने का अदरवाइज नेक्स्ट तो हम वही टैक्स एग्जाम्शन की बात करने वाले हैं राइट सो एजेंडा फॉर टुडेज डिस्कशन वुड बी so we will discuss about who are NRIs. So it's very important. With DTAA, mutual funds, tax residency certificate, and Form 10F. Then we will also discover we will also discuss the common mistakes. So every 3 out of 5 NRIs are doing this mistake and ignoring their absolute tax exemptions. Also, the entire interpretation will be backed by our case laws as well, be it high courts or income tax tribunals as well. So, Florence, is it not working? So, who is NRI? It's very simple. If you are residing outside India for more than 182 days, plus if you stayed in India for more than 120 days in last 4 years, then you will, if this condition is not satisfied, then you will be considered as NRI or non-residents. But why it is important? Because if you are selling any of your Dubai property or any of your foreign property and moving back to India, so India can tax you on the Dubai property or any property which is outside India. If you're selling any of your America property and again going back to India, so there are chances that you may be taxed doubly. That is in once in America and again in India. So there is a provision of R and NOR as well. If that means your tax won't be applicable if you are selling that property after 3 years residing in India. So that will save a lot of your money and you won't be taxed doubly, right? So there are exceptions to these rules. If you are moving out of India as a crew member of any shipment or for employment, so you are just required to uh, 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 comply with the first condition only. That is, just stay outside India for more than 182 days, right? So, definition of NRI is completed. Now we will just actually, Navrata, this is not working. So, what type of incomes are taxable in India? See, it can be either only received in India, same as any FD interest you are receiving, or source of income is received from India. Either it is received in India or received from India. That is earned in India or earned from India. Uh, uh, if you're uh, if you're doing any professional, if you are earning any professional income from India, so it will be considered as received from India. But if any type of income which has no business connection with India, then it won't be taxed, right? If you're earning any income which has a subsidiary in India as well, so there are chances that you will be taxed on that income as well. So there are everybody knows there are 5 types of income. How are NRIs are taxed? That type of income, any income that is earned, received, or deemed to be earned or received in India, right? The first thing can be salary income or your professional income. If you are giving any consultancy to India or you are receiving any money from India, then income generated from residential property. These are the direct income which you can earn from India. Salary, professional income, residential or housing property, and the third and the most important one is capital gains, for which we are sitting over here, and you came on a Saturday evening devoting your time for this seminar. So, and the fourth thing is income from deposits such as FDs or anything else. So it is also important. And the fifth one is interest earned from your NRO deposit. Everybody knows interest earned from your NRO deposits are taxable. And if you are earning it from NRE or FCNR deposits, it's a tax exempt. But only thing, many of you must be knowing that thing, but the only thing that you need to uh, keep in your mind is you are required to disclose NRE and FCNR interest as well in your ITR. This is the most common mistake, that since many of your UAE taxpayer had not received any income tax notices yet, or hardly 2 or 3% might have received. But if you are residents of US or Canada or any European country, you can ask them what type of harassment they are, वो क्या झेल रहे हैं वो लोग इनकम टैक्स के, राइट? सो नाउ वेट फॉर DTEE, ये 5 टाइप की इनकम आई आपकी. सो in order to save you from all these things, there is a agreement. India has entered into agreement for more than 90 countries. ठीक है? So DTEE is, if you are earning anything from any particular country and there is a tax on your source country as well, and you are again taxed in your resident country, this is nothing but a double taxation, right? So in this case, DTAA, double taxation avoidance agreement, comes to picture to save your to save taxes. In that way, you can only be taxed only in the country where your income has been sourced. So there are various articles in the DTAA which talk which talk specifically about the special type of incomes, be director remuneration, capital gains, or salary, mutual fund. Each and everything are covered over here. So there are 3 methods to claim DTAA benefits. So the first one is foreign tax credit. It's nothing but a cashback type of scheme. So let's say if you are taxed in India at 20% on any type of security, and again you are getting taxed in America as well, so you can claim the 20% which you had already paid in India as a tax credit while filing your returns in your resident country. So since in UAE it's not applicable, right? So there is no tax, no personal tax in here. And the second one is exemption method. It's nothing but a discount, right? So it won't be taxed at its origin as well. So in DTAA, there are various types of clauses which talks about exemption or taxability or discounted tax rate as well. So the third one is reduced rate of tax. So you must be knowing that there is a maximum capping in dividend tax as well under DTAA. In case of dividend, there is if you are resident of Saudi, UAE, you will be taxed only at 10%, not at the slab rates. Everything is mentioned on that list. If you are still paying at the slab rates on your dividend income, so that maximum tax rate is 10% only, withholding or anything like say. Then the most important thing is income from capital gains, right? So what are long term? If any type of security, be it equity oriented mutual fund, then the tax rate is 12.5% in excess of 1.25 lakhs. Anything else, then it will be 20%. Before budget 24, it was 20% with indexation. You have two options, right? And short term, it depends upon your period of holding, right? So if the security you hold is exceeds 12 months in case of shares, then it is considered as long term. Otherwise it's a short term. In case of immovable property, it's 2 years. If you are holding immovable property, land, flat, or anything, if you are holding it for more than 2 years, it will be considered as long term. Otherwise short term, right? So so what happens now? We have now covered what are mutual funds, what is NRI, who is NRI, and what is the DTAA benefit you can claim from that type of script. So what happens when a Dubai or Singapore NRIs redeems any mutual fund in India? So for this perspective, most of the people are paying tax in India for while redeeming this mutual fund, right? So we need to go to the DTAA article which talks about this particular exemption. So the article 13, there are various articles in the DTAA between India and UAE. It was signed in 1994, but the article 13 specifically talks about mutual fund only, sorry, capital gains only. So there are 5 clauses in that particular article whereby first 4 clauses are related to immovable property, movable property, then any fixed base type of properties, and the fourth one is shares. See, if you are having any, if you have sold any immovable property, right? So the power to tax rest with only country where your where your immovable property is situated, right? Be it immovable property or movable property. In that case, we need to check where your property is situated. If you sell any your Dubai in any Delhi property, the power to tax rest with only Indian government only and not any foreign government. In the fourth clause talks about shares. Again, if you are selling any share of an Indian company, the power to tax rest again with India only. As in the earlier presentation, you had also heard that you are the partner in that company, in partner in that particular Indian company. Since you are a partner in that Indian company, the power to tax also rests with the Indian government only. So in the fifth clause, which is a residual clause, it talks about that any other asset which is not covered in the first 4 clauses, the power to tax rests with the country where you are the resident, right? So they in the first 4 clauses, immovable, movable shares are covered. But what about mutual funds? Whether mutual funds are shares or they are having their own distinct property. But back of the mind, you might be thinking that since mutual fund are also investing in equity oriented funds or that type of security, right? So, but in that case, we need to check what are the features or what is the base element of a mutual fund. So in case of mutual fund, you just pay money or give money to a particular mutual fund company or AMC, and AMCs forward that particular invested amount. They invest in a, be it shares, mutual fund, or any type of securities. But against your money, you don't receive any type of share. You receive units of mutual fund. You are not getting shares of that particular Indian company or any income or any asset. You are not shareholder of that particular company. You are the unit holder of the AMC. So but whether this interpretation is backed by any case law or what, so this is our interpretation that this should be the case. So so you must be thinking that, does that mean that mutual funds are not shares, right? So you are absolutely right. In the for this interpretation as well, we have various case laws as well. But before that, let's just discuss about what are the key steps involved for getting the DTAA benefit. Even if you are resident of that particular country, that doesn't mean that you are given a visa to get that DTAA benefit. The first and the foremost important thing is you are required to get the tax residency certificate. Then only you will be considered that you are the resident of that country where where the law of land will apply in that case. So for getting TRC, you can go to your particular country's tax website. You can easily get the TRC, pay the requisite fees, which confirms that you are the tax resident of that country and get the particular DTAA benefit. Once getting the TRC, you can give that TRC to the particular AMCs so that your TDS won't get deducted in the first origin point only. Then if your TDS is not deducted, then there is no point of getting the refund of the TDS, right? So the third step is getting the form 10F. It's a declaration by the non-resident to the Indian Income Tax Authority that you are the tax resident by submitting your TRC to the Indian authorities. This will close the loop that you were the tax resident of that particular country as well. You are now submitting that particular information with the income tax authority so that it closes the loop and you will be safeguarded against any income tax notice, or or you can fluently get back your TDS which has been deducted by your AMCs. And the last step is after getting 10F, better to file your income tax return and disclose each and every aspect of your capital gains. Even if it is exempt under DTAA, there are particular schedules for it. And this is the most risky point where many people don't know where to put that particular income. So this is the most risky point where how to file ITR and how to get the form 10F. So these are the 4 important steps in order to get the DTAA benefit. So in fact, whatever we are speaking in last 15 minutes, whatever I am claiming about this particular interpretation, our interpretation is also backed by various high courts and tribunal as well. And the first and the most pertinent case law is related to Deputy Commissioner of Income Tax versus K.E. Faisal, which was uh, which is where the K.E. Faisal, who is a resident who is a resident of UAE, sold some securities, and he claimed it as he claimed the capital gains as an exempt security and claimed mutual fund under clause 13.5. But AO rejected his claim, stating that mutual fund has no such distinct securities, and it is equivalent to shares, and the tax should be levied as per shares only, and the power to tax should rest with Indian authorities. But the matter went to ITAT, and the tribunal seconded this interpretation, which is we are claiming that mutual fund comes under the residual clause and the power to tax will rest with the country of residence only. Okay, and there is another case law in the back of the mind. You will also get this thing that कहीं तो टैक्स लगे, इंडिया में भी टैक्स नहीं लग रहा है, यूएई में भी टैक्स नहीं लग रहा है, तो वंदे भारत और एम्स कैसे बनेगा, राइट? वंदे भारत एक्सप्रेस, ठीक है? तो हाउ, बट उसका भी एक है, वी हैव केस लॉ which is related to Saket Kanoi versus income tax versus DCIT, which was judged by the tribunal Delhi. ठीक है? It is very recent case law where ITAT also held that stating the case of Ramesh Kumar Goenka, where the liable to tax doesn't mean that actual payment should be made, right? Actual tax payment should be made. So it's the UAE's duty whether to tax it or not. Now, as per DTAA, the matter has been passed on to your country of residence only. It's their duty or it's their business whether to tax that particular security or not. If they are not taxing, then ठीक है, it will be exempt capital gains, right? So there is again a case law which talks about the same thing, ठीक है? Then we have another case law. This is the very recent one. ये यही case law की वजह से this thing became very popular, which was it was heard by Mumbai tribunal, Anushka Sanjay Shah, where Miss Anushka was rather Mrs. Anushka was a resident of Singapore. She sold some debt securities, debt mutual funds. It was short-term mutual fund, short-term gains on that particular mutual fund. And AO denied, assessing officer denied her claim that mutual funds are also shares, denied that claim that mutual funds are not shares, and mutual funds are not having any distinct features. So ITAT, in fact, that matter also went to DRP as well, dispute resolution as well. So DRP also affirmed the AO's interpretation and disallowed her exemption. So, what ITAT held? ITAT again backed the Saket Kanoi, K.E. Faisal, Blackstone Capital's case, and again give the same statement that shares are not mutual funds and mutual funds are having their own distinct value and it should be considered as a residual value or under Article 13.5. Okay, so again this is the third case which backs our interpretation as well. We have many case laws, right? So also related to Blackstone Capital only. In case of you are a Singapore resident, the only thing is you are required to repatriate the funds. In any other country, it is not required. Okay. In fact, not only mutual funds, there are other securities as well which are covered under Article 13.5. Rights entitlement are one of those. In fact, there is a case law related to Vanguard Funds Ireland as well. They sold some rights in India. So again, rights are not shares, and power to tax rests with the country of residence only. These are the summary of a few of the judgments, where the final takeaway is that only that mutual funds are not share, and the mutual funds are covered under Article 13(5) of the DTAA between India and UAE. And the most of the DTAA are having the same Article 13(5) only. So these are the few of the countries where DTAA exemption is there, be it UAE, Saudi, Singapore, Kenya, Malaysia, Portugal, Qatar, Sweden, Luxembourg, Georgia, and more. Right. So there are various articles which talks about that particular thing. The only thing that if you are remitting, again, many people of you must be knowing that if you are remitting through your NRE account, there is no any limit. If you are remitting through NRO account, then there is a repatriation limit of $1 million, 1 million US dollars. If you're repatriating, there is a limit of 1 million US dollar. Otherwise, you are required to take the permission from RBI. Okay. So linking the cards, the first and the foremost important thing is get the residency certificate, right? Satisfy the residency rules. Stay in that particular country for more than 182 days. Get the TRC, get the valid TRC. In UAE, you get the TRC for a calendar year, right? Get the valid TRC, file Form 10F, which proves that you are the tax resident of that particular country, and also you have closed the loop by sharing that information with Indian authorities कि हम लोग tax residents भी हैं. Even if you are having golden visa or any type of visa, that doesn't matter. You are required to have a tax residency as well. So there is a next few things will be taken care by the Ankit bhai as well, that prevention versus cure. Just submit that particular thing with the AMC. Team Wealthy Nivesh will help you out to communicate with AMC, that particular your AMC TRC, so that the TDS won't be deducted at the origin point only, and there is no question to get the TDS refund. File your income tax return and disclose it in an appropriate schedule. This is the most important thing and the most riskiest thing, that if you disclose it in any other type of schedule, be it exempt income or any type of schedule, last 15 years, many people are saving this thing, but the most important is you are required to disclose it in the appropriate annexure Thank you so much.
Thank you, Mr. Shubham, for making such a complex subject simple and clear for us. Now, I would like to call Mr. Jitendra Jaiswal to give a small token of thanks to Mr. Shubham. Now, I would like to call Mr. Ankit to speak for a few minutes and share his thoughts on TRC.
Kind of pointer. So, as Shubham mentioned that there are two ways of saving this tax, prevention and cure. And I believe as with health, we all will agree that it's better to do prevention than cure when it comes to our wealth also. So I'll take you through how being your wealth manager, we will help you to avoid TDS on mutual funds itself. So who is this for? I think context is very well set now. It is for UAE based NRIs who can obtain NRE TRC. So I have tried to make it as simple as possible. There are only two ways by which you can save your tax on mutual funds in India. One is prevention. Prevention means that you provide TRC before the date of redemption. And second is cure. Cure means you have already done the redemption part and now we will take the refund of the TDS which is deducted by the AMC. Why AMC will deduct TDS? Because they are supposed to deduct TDS for all the NRI investments. You have any question, ma'am? No. So TRC you have to take from UAE side. In UAE, yes. So not like you have to be outside India for more than 182 days. That is for India requirement. But for UAE TRC requirement, you have to be here for 182 days. Country where you are based out. So first I'll take the prevention part. What happens in prevention part? You avail TRC, and when do you avail TRC? You avail when you have completed 182 days in Dubai or say UAE. So let's assume that you have not done any travel outside Dubai, so you can avail this certificate in July or August. And it's this certificate is for calendar year, so it's valid till 31st December. And what we do, basis TRC and 10F, we get it feeded against your folio number. So when it gets feeded against your folio number, then AMC will give an acknowledgement that this TRC with this date of validity has been feeded. Yes. So only one TRC, all AMCs. So it is valid for calendar year. So if you take in July, August, it will be valid till 31st December of that respective year. So there are three sets of documents. One is TRC. The second is 10F, which will be given by Income Tax Department in India. And third one is your respective AMC. So like you asked, is it different for AMC? TRC is same, but every AMC will have certain set of documents, which RRM will help you. Yes, you will do. Federal government. Federal government. It's an online process. So, so our team will help handhold you in applying TRC also. Yes, sir. No. So there is misunderstanding over here. In the month of July, if I assume you have completed 182 days in Dubai, then the TRC that you will get, it will be valid from 1st January 25 to 31st December 25. So before 31st December 25, if you do redemption, provided that our team has helped you to get the TRC faded, there won't be any TDS itself. Yes, correct. So this scenario, Shubham can help you. I can't answer this question. This scenario, Shubham can help you. But I think what your understanding is correct. Because as you rightly said that in India it will be financial year, while over here it will be. So you can apply for modification, but that again Shubham can tell you better. So all these queries, I'll say ki let you give us the checklist and our team will arrange a call with Shubham's team for you. But let me first finish this slide because this is gist of the thing. I'll take your question. Let me first finish this slide. So first step is you take TRC. Second step is our team help you to avail 10F from income tax department. Third step is ki you tell us ki these are the fund houses. Fourth step is our team get all the documents sorted for you. They check it and then they share it with respective AMs. After that, before 31st December, as and when you do redemption, there won't be any TDS. We have already done it for the clients last financial years. If you want to talk to those clients, you can come to me and I'll check with those clients whether they are comfortable talking or not. So just एक point मैं खत्म कर लूँ. इसके बाद जो last step आएगा, that will be done by Shubham. What Shubham will do कि at the time of filing the ITR, those transactions will reflect in your ITR, in your 26 AS. So he will ensure that those transactions are tagged as non-taxable. बताइए सर, यही था क्वेश्चन. ठीक है. तो yes. That's a very valid question. आपको भरना नहीं होगा, बट पॉइंट इज कि उस पॉइंट पे सीए जो है, शुभम जो है, वो ये मैपिंग करेगा कि जो ट्रांजेक्शन्स आपके 26 एएस में दिखाई दे रही हैं, दीज आर नॉट टैक्सेबल, क्योंकि लुकिंग फ्रॉम गवर्नमेंट साइड दे आर नॉट अवेयर ऑफ दीज थिंग्स. So he will do requisite documentation for the same. Now they say कि government like any government doesn't like thieves because they are in competition of stealing our money. So everybody over here will agree that it's more difficult to get money out of government. So our suggestion to our clients is कि you work on prevention side. More so for those clients who have built a certain level of portfolio over a period of time, over a period of years, better is सब redeem कर दो, सारा एक साथ अपना टैक्स बचा लो, उसे आप री इन्वेस्ट कर दो. आपने 100 रुपए इन्वेस्ट किए थे, वो 170 रुपए हो गए, आप आज ही उसे रिडीम करो, 170 रुपए लो अपने अकाउंट में, 170 को इन्वेस्ट करो. कल को आप वापस इंडिया जाते हैं, वो 170 200 रुपए बन जाएंगे, आपका टैक्स 30 रुपए पे लगेगा. जबकि अगर आपने ऐसा नहीं करा तो आपका टैक्स 100 रुपए पे लगेगा, क्योंकि 100 का 200 हो चुका है. Yes. So as they say, prevention is better than cure. So just let me finish this. अगर आपका ये हुआ है कि आपका ऑलरेडी टीडीएस कट चुका है, उस केस में विद सिमिलर सेट ऑफ डॉक्यूमेंट्स एक्सेप्ट फॉर एएमसी, क्योंकि एएमसी को आपको उस केस में कुछ नहीं बताना है, उस केस में आप इनकम टैक्स डिपार्टमेंट से सीए विल हेल्प यू टू गेट दैट refund recovered. So your question? So the only instance when Indian government went retrospectively was when Pranab Mukherjee was finance minister, and they did it for a Vodafone deal. That was the only instance in the history of India that retrospective was done, as far as my memory goes. Arun Jaitley by a court of law. Yes. And this government, they have not beaten drums over it, but I remember Arun Jaitley, when he became finance minister, he said we are completely against retrospective effects. और इसलिए मैं कह रहा हूँ कि आप कर लो, और रेट्रोस्पेक्टिव का तो अगर डर है तो वो तो मेरी इनकम पे भी है। कल को गवर्नमेंट ये भी कह सकते हैं हमने 12 लाख तक पे टैक्स फ्री किया था, लेकिन अब हमारा मन नहीं करता, या वो कल को दूसरी गवर्नमेंट आए वो कहे मोदी जी ने करा था, हमें अच्छे नहीं लगते मोदी जी, तो अब हम 12 लाख पे भी टैक्स लगा देंगे। यस यस। So this is the prevention part which I have discussed. First is be more than 182 days in UAE, obtain TRC, prepare 10F, submit documents to AMC before redemption, and reconciliation during filing of ITR, which will be done by Shubham's team. Cure after redemption we have discussed. This is the checklist that you require. So that's the long and short of it. Again, as I said, if you want any more questions, you can tick the checklist with TRC and we will arrange call with you. Yes, sir. Tick mic दोनों यार उधर. So just a second, I am sending mic. So all the presentations that we gave from the Wealthy Nivesh side, they will be part of the folder that we will be sharing with you. So you will have hard copies of the same. Yes, sir. Yes, sir. Still not okay. So I am still not audible. Can I take your question later on after this session? Great. Great. So copy. Tea and coffee. So we'll now have a tea and coffee break. Tea and coffee is outside in the lobby. So you can bring your tea and coffee here also. They declined to serve it over here. In India, we are spoiled for choices like this. So, so please carry on and we'll assemble after 15 minutes. In the meantime, whatever questions you have, I'll be very happy to address them.
And we have very interesting sessions lined up on real estate, on India valuations and gift city and will making. So there are 4 sessions after each, and then we'll convene for dinner. This is for what?
This is for YouTube live. So if you'll put this to YouTube में आपकी clear आवाज आएगी. So we are live on YouTube.
Okay, okay.
हाँ. So that is for audience and it's this is for YouTube. So I'll keep it clear only. Welcome back. Welcome back after a small break. Our next discussion is on relative valuations in Indian markets, understanding where opportunities lie and how to assess them. For this, we have with us Mr. Deepak Nair, Vice President at Motilal Oswal AMC. Please join me in welcoming him.
Good evening, ladies and gentlemen. We can just settle down, please. I know long sessions, and thank you for being here on our weekend, giving us the opportunity to share our thoughts, our views on what's happening on the market and the way forward. So my job is very simple, thanks to some of the veterans who have taken some sessions earlier. So Ankit spoke about where to invest, and we all know which is the best asset class to invest in, which happens to be India today. So I come from Motilal Oswal, where my founder Ramdevji believes there is only one asset class, which is equities, and believes that India is the only shining star in today's day and age, where long-term compounding can see markets give you phenomenally high opportunities for wealth creation. In every conversation that he has, he mentions how he started his journey about 35 years back when Sensex was around 100. Today, we all know it's around 84, 85,000. I started my career about 25 years back, just around the dot-com bust, when Nifty, to everybody's surprise, was around 1100 points. After that, we had the global financial crisis in 2007-8. We had the currency crisis. We had the taper tantrum in 12-13. Of course, you had the demon in 2016, followed by the ILFS crisis in 2017. And then in recent times, we had the COVID. Despite all these terrible things or events that have played out in the last 15, 20 years, the markets, like Ashish mentioned earlier, has been compounding at around 14 to 15%. And this, our view and our conviction is that this will continue to grow for the next 25, 30 years. So essentially, one of the most easiest way to look at your money doubling every 5 years is to be in India. While Ankit spoke about where, Ashish spoke about how in terms of asset allocation, I'm here to speak about a very, very difficult topic, and one which is very, very pertinent, is when to invest. So if you ask my founders, Ramdevji, he'll say now and forever be invested, right? But of course, things are different for different people. Ankit and team will take you through various asset allocation plans, and he will draw out a plan for you in terms of where to invest, when to invest. I'm here to just give you some thoughts about why we think you don't have to really look at timing the market. I'm sure most of you have heard this time and again, that it is time in the market and not timing the market, which actually makes money for you. So with that, I'll probably skip some of these slides which have already been covered and straight away go to valuations. While yes, markets have corrected over the last almost a year now, since September of last year, markets have remained more or less flat. In the last 1 year, Nifty returns are roughly around 2 to 3%, whereas the earnings have grown by about 8% for the Nifty companies, right? So in terms of valuation, this pointer work? So, yeah, thanks. Sorry. Anyway, so essentially what we are seeing is this is a chart which tells you one particular number of looking at market valuations. So if you see here, the first one is of course of the Nifty 50, which is the top 50 companies of the country, where compared to the historical average, the current PE of 21 times is roughly almost near the long-term average. But if you see, one of the most often asked question is in terms of valuation for the small caps and the mid caps. So from this chart, if you just look at the number optically, it looks that the mid cap stocks or the mid cap index and the small cap index looks very, very expensive compared to the long-term averages. We have a small disagreement to this one number, because in any investment, any decision that you take in life, It is not about taking a decision based on one data point. You have to look at various data points, you have to look at various angles, and then take a decision. We have done small chart here, slightly complicated, so just bear with me on this. But if you see the first number, again, I'm sorry, if you see the first one, it talks about a company which is growing at 16%. Every year, let's say 100 rupees gives you 16, 16, 16. At the end of the 10th year, it gives you 1100 rupees. But if the company were to grow at just 15%, 1% lower for the next 10 years, the valuation actually drops by about 5%. So just inverse this. If a company growing at 15% suddenly starts growing at 1% extra, 16% for the next 10 years, your valuation can be 5% higher. And that is what we saw in the last 4-5 years since COVID. A lot of these small cap companies, a lot of these small cap indexes have grown at about 35 to 40%. And it is our belief that it will continue to grow at that healthy clip, because a lot of these new sectors which are emerging, which were not there earlier, are today great opportunities for us to make money. How many of you thought about investing into defense companies 5 years back? Maybe 1 in 1,000, right? How many of you looked at investing into electronic manufacturing companies about 5 years back? There were no companies. How many of you looked at hospitals to invest? There was only one company, which was Apollo Hospital. Of course, we had some pharma companies. How many of us invested in renewable power? Of course, all investors invested in Suzlon way back in 2006-07, and then there's a big debacle. But today, the point that I want to make here is that over the last 3-4 years, there have been a lot of new sectors which have emerged. And these are the sectors which are likely to grow at earnings which are far, far, far higher than what we saw in terms of the headline number. So I'll just maybe skip some of these slides, and this is what we believe are some of the sectors where Motilal Oswal as a company is investing into. So for example, one of the biggest themes that we are looking at is this whole China plus one Make in India theme. Ankit spoke about a lot of reforms that has been started by the government of India, especially the PLI, the production linked incentive. The government wants to give a lot of boost to manufacturing in India. They want to give boost to exports, because exports end of the day also generates a lot of employment. It also adds to the growth of the GDP. So one of the biggest beneficiaries of the PLI scheme has been the electronic manufacturing services. And Ankit again gave you the number of Apple phones being manufactured in India. Last year, we exported close to about 150 million phones, right? So today, big brands like Apple phones are being made in India. Google Pixel is being made in India. And you'll be surprised, a lot of these Chinese phones, like a Oppo or a Vivo or a Realme or a Xiaomi, are also being made in India. Very soon, we'll also be making some of these tabs and some of these phones for a lot of other companies also. So that has been the biggest beneficiary of the government's production linked incentive. And we have a lot of examples in our portfolios and in some of the stocks that you have invested to, which have really benefited from them. Second one, of course, is your entire renewable power. Like I mentioned, a couple of years back, there was only one company, Suzlon. A lot of us invested in that company. Of course, it had a very, very bad cycle since global financial crisis. But today, it is the government's stated intent that by 2030, 30% of all the power generated in the country has to be from cleaner, greener source. So the green source of energy comes from nuclear or wind or solar. Nuclear, you don't really go hammer and tong behind it, because it has got its inherent safety hazards. You don't have too many private sector companies in which you can invest and make money from. But a lot of companies on the wind and the solar side are actually really benefiting from the structural change that the government of India is bringing by investing into some of this renewable power. The third biggest sector, which all of us are really benefiting from, is financialization of savings, right? And I'll give you a small example of that in this particular chart here. Sorry for that. Yeah. Look at this number. So over the last 25 years, our total savings pool in India was roughly around $12 billion. In the next 25 years, trillion dollars. In the next 25 years, this will go to $103 trillion. I don't even know how many zeros will come if I convert it. Because post-COVID, what has really happened is people are moving money out of bank deposits, land bank, and gold, getting into mutual funds, getting into capital markets. You're seeing a lot of numbers being thrown at you. Number of demat accounts grown from 2 crores to about 19 crore. Mutual fund numbers, SIP book is almost $2.5 billion per month. The entire industry, in fact, I started the industry when the entire mutual fund industry was roughly around 5 lakh crore. Today, we're about 70, 75 lakh crore. And look at what has happened because of that. So over the last 2 years, FIIs have been negative in the Indian market by about $4 billion. You and me, through our SIPs, through our mutual funds, through our investments in the stock markets, have contributed almost $102 billion. And this is the biggest cushion for the Indian markets. Now, if I were to combine this to what may happen over the next 25 years, imagine the opportunity that you will have to make money from some of these beneficiaries of this financialization of savings, which is essentially money moving away from traditional bank deposits, land and gold coming into capital markets. So that is the biggest, one of the other themes that we are playing in terms of financialization, where we are looking at a lot of high growth NBFCs. We are looking at capital market participants like stock exchanges, mutual funds, insurance companies, etc., where we believe over the next 25, 30 years, as the savings moves from traditional non-financial assets into financial assets, you will see multiple drivers of growth for you to make money. The third thing that you'll all notice when you go to India is the proliferation of SUVs, right? Every other car on any road in the Indian city is SUV today. 5 years back, pre-COVID, 67% of all the cars sold in the country were Maruti. Today, 58% of all the cars sold is an SUV. Because what has really happened, and this is the psychology which Ashish also spoke about earlier, COVID actually gave us the fear of mortality. We started getting scared for our life. So what it did was, instead of us being on a path of savings, today we want to consume, we want to live a better life, we want to upgrade our lifestyle. Which is why, while the government spoke about housing for all, affordable housing in 2018, go to any city and tell me any affordable house which is getting launched. If you come to Bombay and read any newspaper, the number of deals which are happening of 200 crore, 300 crore, 500 crore is much, much, much higher than deals of 25, 50 lakhs which is happening. So essentially, consumption has become premium. Now imagine when I started my career in 2000, consumption used to mean FMCG, biscuits and shampoos and soaps. So the theory was, as your per capita income kind of grows, you will take bath with a liquid soap. Let's say 25 years back, my salary was $1,000. Today, let's say 10 lakh bucks. How many times do I take bath with that liquid soap? It remains the same, right? But I have a higher propensity to spend on better clothes, travel, bigger house, bigger car. And this is the single biggest structural change which the COVID has brought about. And this is going to be the biggest beneficiary for us to make money out of. So consumption has become premium. So branded clothes, branded products, lifestyle products, luxury developers, name it, have seen phenomenally high numbers being thrown at you from a growth perspective. So in the last 5 years, BMWs and Audis have had phenomenally higher numbers than a Maruti. And that is a small example that I want to leave it out here with. Then, of course, we talk about, while we talk about India being a very, very young country with the average median age about 28 years, the cohort of 65 years plus is also likely to double. And again, going back to my theory of this whole psychology of the mortality fear, we would want to be treated by the best of the doctors. I have been an NRI in Dubai. I was working with HDFC Bank a couple of years back, and I'm sure you will all agree. Anytime you have a dental problem, you will go back to India. You don't do it here, right? And that's my experience. That's 100% right every time. So today, even for a bypass surgery, any elective surgery, anything which is not life-threatening and an emergency, you would plan it in a way that you go back to India and get it done there. I'll give you a small number on how this becomes a wealth creation opportunity. All of us know about Apollo Hospital. There is a small matrix called average revenue per occupied bed per day. For Apollo Hospital, about a quarter back, this number was 58,000 bucks. You and me, sir, can stay in Umaid Bhawan Palace Hotel for that price for a night. But this is what a hospital bed is charging per day. And occupancies are 80% plus. So imagine a hospital which is now professionally run is also becoming an opportunity for us to make money out of. These revenues were not there 5-6 years ago. Medical tourism coming back. Bypass surgery in the US costs about $2.5-3 lakh, $15,000-16,000 in India. Another $15,000-16,000 you can have a recuperation done in a 5-star hotel also. That is the opportunity to make money. With me on this? So when you look at valuation, somebody says, and I showed you the chart earlier, historically, if I could go back, this is a 10-year average of a mid-cap index at 17%. A lot of these industries which I just mentioned, the sectors which I just mentioned, were not part of the index 5 years back. So what is the sanctity of that long-term average, where you have a lot of new sectors, a lot of new companies, which are actually growing much faster than the index. So don't look at number, or a investment decision should not be taken basis the valuation alone. You should look at what is the growth. Ashish again mentioned about why last decade US was the best performing market. From 2010 to 2020, US had the best performance because the companies on an average grew by about 13 to 15%, which is the largest stock in the world today in terms of market capitalization. Their growth rate last quarter was 144%. The last quarter revenue was $18 billion. Who knew Nvidia 5 years back? Nobody, right? I've got a company in my portfolio. I can't name the company, of course, because of regulatory requirements, which makes parts for Chandrayaan. I can't name the stock, sorry. So we have a stock which makes components for Chandrayaan, and Chandrayaan landed in the moon last year at 120 at the cost of what NASA does. We have companies today which are actually competing with the Taiwanese companies for making semiconductors in India. We have companies in India which actually makes the printed circuit boards on which every smartphone, mobile, tab, everything actually operates out of. None of these were there 3, 4, 5 years back. So when you talk about a historical average, if you have new segments of growth emerging, taking decisions based on historical numbers, like they say, don't drive looking at the rear view mirror, is a big fallacy. So it is our view that while the general outlook for the market is that markets could remain sideways in a broader sense, this is a stock pickers market. If you get your sectors right, if you get the themes right, if you get your stocks right, you can make more money than what the index has delivered historically. So I have a lot of charts. I don't want to bore you with all that at the fag end of the day. But just remember this one thing. Markets will always follow earnings growth. The only truth in the equity market investing is follow the earnings. Like a lot of crime thrillers, you say, no, follow the money. Who benefits from that murder? Here in equity investing, it is who makes money in terms of earnings. And if you see historically, only when there has been a revenue growth, you have seen the stock price also deliver, which can be seen from this chart. This is what Ashish was referring to earlier. So between 2008 and 2020, earnings grew by about 4%. So markets were flat. They did nothing. In the golden period of Indian markets between 2003 and 2008, the India shining story of Mr. Vajpayee, Nifty went from 1,100 levels to 6,300 levels, which means a 34% CAGR, because the earnings grew by about 24%. So follow the earnings, be in sectors which are likely to benefit in the future, and that is where you make money. How many of you invested in Infosys in the 90s? We all invested in Infosys after it became Infosys in the late 2000. But person who invested in Infosys, and here says Mr. Naramurthy's driver, he became a crorepati because he had the stocks of Infosys from 1990s. Who invested in ICICI Bank or HDFC Bank in 2000? We all invested after they delivered a 20% CAGR growth. Equity market is not about driving, looking at the backward, what's happening behind you. HDFC gave you compounded 20 years for 20 years. Yes. Will it give you compounded 20 years, 20% for the next 20 years? So who's the next SGFC? Who's the next Infosys? Is from some of the sectors which I mentioned here, right? And look at this. This is a projection of the on the extreme left-hand side of the chart of the large cap, mid cap, and the small cap. People say small cap mein rally ho gaya, mid cap mein rally ho gaya. We don't want to be invested there. Large caps has got safety. At Motilal Oswal, we beg to differ here. The entire Nifty basket is likely to grow the earnings for the next 2 years by about 10%. Now, Nifty may 34% is taken by banks and financial services. You have another 12 to 13% of IT there, which means 50% of your Nifty index is likely to grow at 6 to 8%. Balance is oil and gas, Reliance, and all those guys. So total average is a 10% growth for the Nifty companies. Compare this to some of the mid-cap index, which is likely to grow at double that clip of 20%. And small cap, of course, will have a 17, 18% growth. And India is an emerging country. Since the day I started learning, we have been a developing country. We haven't developed yet. But haven't we grown? So growth is in identifying some of these good, fundamentally strong mid-cap, small-cap names, which are likely to grow the earnings far higher than what the nominal GDP of the country is. So very short one. I don't want to really bore you with all that. And this is just a small reference. So traditionally, when we all started investing, look at the left-hand side chart. These are what we call as the old economy sectors. Look at banks, look at ITs, FMCG, all growing at 4%, 3%, 7%. But some of the names which I mentioned here, and these are all delivered earnings. So 46% year on year, which is 40 times higher than what the index gave. So follow the earnings, returns will come. And that is my only bit about valuations. Everything else is relative. Earnings is what matters. That's the ultimate truth in investing. And if you get your earnings call right, भले 2-3% ऊपर नीचे हो जाता है, long-term effect of that earnings compounding at a fast, higher clip will give you phenomenally high wealth. So with that, thank you so much. I don't want to bore you. Just a small number here on what we can't even imagine. I wouldn't have believed when I started my career in 2000 that in my lifetime I'll see 3 lakh number on the Nifty. That's very simple. It just needs 12% compounded growth for the next 25 years. And it has delivered more than that, right? So 1000 when I start my career in 2000 is 25,000 today. So I've seen one leg of my journey here. The next leg of the journey we'll all see together. So with that, thank you so much. And this is again what Ashish mentioned. Sorry, I'm taking a small Aditya on asset allocation. So this is a chart for last 25 years and goes back to my comment on why time in the market matters, not timing the market. So look at this chart for the last 25 years. I mentioned about Nifty growing from 1000 to 6300 levels. It saw 13 huge falls. Out of the 13 huge falls, look at the number of 27%, 30%, 60%, 28%. So these are 8 such huge falls. How do you time these things? You can't. It happens, it bounces back. Like COVID, Ashish mentioned. March 2020, Nifty fell from 12,500 to 7,500. Zoop, it went to 7,000, 17,000. And trust me, I have a lot of investors. My experience plus your investment experience has been when Nifty in March, April onwards started moving back. From 7,500 it went to 10,000. Client said, thoda sa girne de 9,000 मैं invest करता हूँ. It went to 12,000. Investor said, let it come to 10,000, I'll invest. It went to 14,000. They said, 12 में डालता हूँ. It went to 15. They said, अभी छोड़ दो. Then they all came at 20, 21, 22, 23,000, whatever levels. Bulk of the investors, a lot of the youngsters have come into the market in the last 2-3 years. They've only seen one way of the market. And the biggest fallacy or the biggest crime that you can do is to be out of the market. I don't have the chart, but I will share it with the team of Wealthy Nivesh. So we have done a small study of if you're invested 100 rupees at the beginning of Nifty in 1991 and just forgotten about it, it would have become about 5,800 rupees. That is not the big number. The big number is, I'm sorry, I don't have the chart, very powerful chart. The story is, in that 30 years, if you had just missed the 30 best days of the market, I'll repeat myself, in a 30-year span, if you had just been out of the market in the 30 best days of the market, your 5,800 rupees actually falls to 2,100 rupees. So how do you time 30 days in a 30-year period? So आप कैसे time करोगे इसको? So best is to have your asset allocation model. Of course, you have partners who will help you design the portfolios, debt, equity, gold, silver, whatever, but stay invested. Stay the course, stay invested, because Indian markets will deliver phenomenally high returns, much, much, much higher than what we saw in the last 25 years. So out of my 1,50,000 crore that we manage at Motilal Asset Management, 8,500 crore of the promoters' money is only into the same equity scheme because they don't invest anywhere else. And they have seen phenomenally, they have become billionaires by doing just one thing. And my own personal example is the day Motilalji and Ramdevji get dividend, he calls 4 dealers and says कि कितने जल्दी खरीद सकते हो? They don't say कि कब खरीदे, से कितने जल्दी खरीद सकते हो? That is what makes money. Very difficult to time the market, very difficult to just look at one number and say valuation cheap hai, higher hai, expensive hai. Have your asset allocation plan. Look at companies in sectors which are growing at much, much, much faster clip than the normal GDP growth, and you make your money. Thank you so much for that. Yeah, this is again one personal favorite. Sorry, last one slide. We have got 3 wars which are running. Right, the biggest is of course the Palestine-Israel war. In Middle East, this became a big issue. Nobody wanted to invest because there was a war happening. But look at the Israeli stock market. The moment that war happened, September, November of 2003, the market zooped up. This is Israel market. War is very, very, very good, unfortunately, for businesses. Very good for businesses. US became US because of supplying arms and ammunition to the warring countries. Started the World War II. Right? So do not worry about these noises, they will come. Have your plans in place, keep investing. If you want to be a little prudent, stagger the investments for a couple of months, but be invested. Thank you so much. Should we take any questions from them or?
Just one question from my side.
Sure.
And we've covered all the questions on the valuations and the sectors as well, the themes that are in focus for you. We have seen the markets, if we compare them with the historical average, they appear to be at. But do you think India, there have been structural changes over the past 10 years through which India commands that premium? And the next question I'll also state right away.
Sure.
That you focused on earnings growth, that market returns follows earnings growth. And there's a very high difference between 10% earnings growth, 15%, 25% earnings. So what are the best practices at your AMC which help you identify those companies which grow at such high compounded growth rate?
Sure. Thank you for that. So I'll take the second question first. So essentially, what we do is we don't look at just one number like a PE. We look at what is called as price earnings to growth, PEG. Because end of the day, you are investing today for what the growth is going to be delivered by the company in the future. So essentially, you're paying that $1 for the future earnings. So PEG is that matrix which looks at the valuation with respect to what is the growth. So for us to answer the question what Aditya asked, we look at PEG multiple of anywhere between 1 to 2.5 times. Anything more than that becomes a little expensive, and we have seen that in the past. The moment it goes beyond 2.5, 3, we would like to book some profits, trim the exposure, take some money off the table, but of course stay invested as long as the fundamentals are strong. But that is one matrix that we use at Motilal Oswal. So price earnings to growth multiple is what we see. To answer the first question, look at what happened here. This is a small cap index which had a 2% earnings growth for about 14, 15 years. And I can say with reasonable certainty, most of you are into some trading, some manufacturing units here. The entire manufacturing setup of Indian economy was decimated here because China became the factory of the world. So 2000, of course, you had the Y2K issue, 99, 2000, we had the Y2K bug. India became the KPO, BPO of the world. Everything was Boston to Bangalore. But at the same time, manufacturing jobs went away from India to China, which is why all the SME, MSME, which is all in the small cap, hardly had any earnings growth, which means they couldn't deliver returns. Was post-COVID, you all know shipments from China got stuck, container went to US, वहां से वापस आने के लिए कुछ नहीं है, we didn't have containers to come back, shortage of container, prices went through the roof. China was locked down for about 3 years, no laptops, no phones, nothing getting exported from there. Every country said we want to have alternates. So today, we have got a lot of manufacturing set up through the government reforms, through the incentives, which has kind of kick-started this whole thing. So today, we want to have semiconductors, we want to manufacture phones. So this entire revival of manufacturing is something that will see our export picking up. The premiumization, where the country is moving away from a capex-led growth to a consumption-led growth, will sustain the earnings momentum. And emergence of a lot of these new sectors, some of the examples which I mentioned to you today, will ensure that the premium that India commands today to the global markets could also continue. So today we have everything going for us: a stable government, a very, very strong Reserve Bank of India, which has been cutting rates very, very aggressively for supporting growth. Of course, you must have heard about GST being cut. The government actually wants to kickstart consumption. So if you get cars and two-wheelers at a 10% discount, volumes will go up. And India is nothing but numbers. So anything multiplied by 10 is the kind of quantum leap that you get from the Indian markets. So that is what I think, plus a very, very young population, right? And today's bachas don't listen to us. My son does not listen to me. He's just 11. Because he keeps hearing about Nifty, small cap, mid cap all through my day. He's saying, मेरा pocket money आप उसमें डाल दो, SIP कर दो. And I've done that, right? I have got 4 Uber drivers in Bombay, and in the last 3 years, only one guy has made money. So all the 4 Uber drivers, I told them, आप ये खोलो, SIP चालू करो. Only one guy made money. Because he said, Deepak sir, मैं ये app delete कर रहा हूँ, because I don't want to see the valuation every day. बाकी 3 लोगों ने valuation देखा रहे 1000 का 2000 हो गया, निकाल दो. They will never make money. And this is an actual example. So the new population is getting into capital markets in a big way. Premiumization is driving a lot of potentially new places. Plus the government incentives is leading to discovery of a lot of wealth creation opportunities. And all these are going to be sustainable for the next 25 years. Sorry, long answer to your short question.
Now we can take some questions from the audience.
Yes, sir.
Whenever we see some experts on the market current valuations, many of the experts say though the multiples are very high, market very expensive, come out of it. That opinion is not by all the experts the same. That's one question. Second is, I saw your CAGR for the mid cap companies, almost 50% you mentioned.
Yeah.
But you see those promoters, their own company's projections from the CAGR or PEGR, they will talk on this same confidence. But the investors have more confidence than the promoter itself on the company.
Yeah, absolutely. Absolutely.
This creates confusion in the investor's mind. Many times to keep interested on such lecture.
Well, absolutely. So you'll have to take any such guidance with a pinch of salt. A little bit of research is also required from your end. and you can see it in your daily life. Now somebody says that a mobile manufacturing company is going to grow at 40%. अभी आपको पता है मार्केट में कितने मोबाइल फोन बिक रहे हैं, आप कितना खरीद रहे हो, आपके बेटे के लिए कितना खरीद रहे हो, बेटी ने कितना तोड़ा है, ऑल दोस रिप्लेसमेंट थिंग. But take a number, let's say 15%, 20% growth, discount that 40. It's hypothetical, right? And there are, for every one report which says that a buy, there's one report which says a sell. And that's what market is. Like Ashish mentioned, COVID time, everybody is a seller, nobody is a buyer. But market is a market because for at every price there's a buyer and there is a seller. So जो आपका view है मेरा नहीं होगा. But look at the overall growth of that sector. Within that sector, is this company a leadership position or a challenger? And not a also ran. Also rans will fall off the wayside. The leader will give you stability. The challenger will try to give you growth by earnings growth at a higher clip than the established player. And that's what we do. So we have to take it with a pinch of salt, no straightforward answer. So at our portfolio level, I say my earnings growth is 44%. Can I give you 44% return? Answer is no. I say discounted by half. उसमें भी आप थोड़ा conservative number ले लो. Am I likely to double your money in the next 5 years, which means a 14-15% CAGR? Answer is yes. Anything more than that, we are very, very happy. Pleasure. Yes, please.
Somewhere you on a chart of 12 billion.
Yeah, savings pool. Yeah.
Are we with expectation of this number? Are we being conservative or it will be much more real?
So it is like that earnings estimate. मेरा estimate तो 44 है. It can be lesser. But see, we are only extrapolating what we know today. So let's say your $2,100 of per capita grows to $5,000. And going back to my same example, हजार रुपए की salary में I was taking bath twice. 10 lakh के salary में मैं taking bath twice. Sorry for my crude example, but am I spending the money somewhere else? And yes, yes. So आप वो निफ्टी का चार्ट देखोगे ना, ये वाला जो एवरेज नंबर है 6 months back this used to be somewhere around 17% long term average, which has gone to about 20%. Sorry, yeah, this one. So this average has gone to 20% from 17% just about 6-7 months back. 5 years this can go to 25% average. It can go 30% average also. So that's what it is. And today, because that wealth effect is compounding. It compounds at a much faster clip.
Thank you.
Pleasure. Yes, sir. Sure. Thank you for that. So we export roughly around $80 billion to US. If you see the value add, which means जो हम खुद का बनाते हैं, that is roughly around $20 billion. बाकी सब हम कहीं से खरीदते हैं, उसको कुछ पैकेज करके वापस भेजते हैं. Gems and jewelry, all those things, right? So $20 billion is hardly 0.2% of the GDP. But the markets will react because what Ashish said, psychology, sentiments. So knee-jerk reaction happened because Trump said 25 नहीं 50 करूंगा मैं. Then he says electronics out, pharma out. That's the largest export. उसको जो जरूरत है उस पर नहीं लगाया. जो जरूरत नहीं है and tariff लगाएगा तो he'll do it on very, very small part of what we are exporting. What he wants to actually give it to us, we are not even there in that space. Agriculture, bikes, some of these defense equipments, of course. But today government has started indigenization of defense also. Agriculture is a no-no because of vote bank and all those things. So we don't really feel that there will be a big impact of US tariffs on India, barring the noise and the short-term knee-jerk reaction of the FIIs or some of these, some of these traders, not investors. So we don't see a big impact coming, but I think overall it will be very, very positive. The bigger worry will be what he does with China. Because the moment Trump's bonhomie with Xi Jinping goes away and he goes back to 100 lagaunga, 200 lagaunga, 300 lagaunga, China can start dumping everything else anywhere else in the world. That will create a lot of impact for us. वो chemical dump करेगा, manufactured good dump करेगा, सब dump करेगा. So our returns, going back to earnings growth, will have to be discounted because China has been dumping what he has been manufacturing traditionally. That is a larger concern than any tariff number that the US, I'm sorry for my word, whimsical president imposes. Yeah.
Thank you so much.
Pleasure. Thank you so much. Thank you.
Now we have a session on credit to AIFs. One is on the credit opportunity side that taken by Mr. Jalan from ICICI AMC, and then on the credit session on real estate that was taken by Mr. Vishal. I'll just ask Mr. Jalan to.
Where's the remote to change the slides?
This one. So I know all of them spoke about equities. It's on. It's on.
Can speak a little bit louder.
Okay. I know equities are the flavor of the season, but you know what brings equities down always? I think the mic is not there.
Yes.
Yes, ma'am. So what brings equity down is there is one asset class which always brings equities down. That's what I'm going to speak. It's fixed income. So I've been given 20 minutes only to speak, so I'll keep it very simple. I'll not complicate things. So alternates, whenever we talk of equity, people talk of equity, then fixed income, and then what else? So somewhere down the line, we thought that alternates is also an asset class. Now, what does alternates include? Alternates again includes equities, fixed income, private equities, office funds, which my colleague will speak. Now, I'm not going to talk about 20% CAGR, 25% CAGR. I don't think we will be ever be there in that. We'll talk of very simple stuffs. What is there in Earth? 10 to 12% or 13 or 14%. That's all we will talk of. That's all we can do. Beyond that, we leave it to the equity markets who will give you 100%, 1000%, 2000%, whatever the numbers are. Specifically, I'm going to talk of private credit. So what does private credit mean? And why do we need private credit? And what are the risks we see? Returns is something we will speak the last, but what is private credit? What exactly do we want to achieve through private credit? See, there are a lot of asset classes. Each one brings its own set of volatilities. Each one brings its own set of risk reward. So we have the real estate, the traditional land which we own. We have the traditional fixed income. We have the traditional FD savings accounts, and then we have equity and gold. Private equity, private credit exactly sits in the middle of this. So private credit, people should not assume that when we do a private credit, it means the returns are guaranteed and there's no risk. Credit always translates into credit risk. Whether we write the word risk or not, it's irrelevant. Credit always translates into risk. Now, what credit brings is a bit of stability in returns, a bit of stability in cash flows, a diversification, and one can also look at a investment horizon which makes. For example, in equity, when you put money today, will you know that you will make returns in 12 months? We don't know. Will you know that we will make returns in 2 years? Probably we don't know. 3 years, 5 years, 10 years, it's all that timing is not in your hands. Whereas in a fixed income, in a credit, when you give money, when it's contracted, you expect the money to come back on time and without any delay or any default. Now, as I mentioned that, despite that, there can be a credit risk. And in our country, at least in India, I can tell you that the defaults have always happened in AAA papers. You can take all the names, anything which you recollect from 2018 to 2020, it has happened that way. So ratings don't dictate credit risk. The only thing which dictates credit risk is the underlying portfolio, where you give money, for what purpose you give money, and how do you expect to get the money back. And that's why credit is not exactly 2 to 6% product, nor it's an 18% plus product. But having said that, credit can encompass anything from 10% to 30%. Everything is credit. Now, what is that 10 to 12% is something we call as performing credit. You give money to companies or groups in which there is an underlying business which is reasonably doing well. You can give at 14 to 16% in which it's a special situation, a turnaround strategy. You can give at 18 to 20%, which is something very distressed fund. You can cross above 24% or 26%, which is venture debt. Everything is credit. Credit does not stop at, it doesn't start at 10 and doesn't end at 12. Neither does it start at 18 and ends at 30. So everything is credit. And anyone who reads the financial newspapers in India, every day there is a credit fund which is open. But that doesn't mean that all of us compete on the same risk. Put in a nutshell, what is the large cap expectations today? You guys will have 8 to 10%. Mid cap is 14, 16. Small cap is 18. So why should a credit fund should have a different risk profile just because I'm giving in the form of a fixed income? So risk is very important, but it brings certain advantages from a allocation perspective. I've seen till 2020, most people look at either debt and equity. What is debt? A straight mutual fund debt funds, a credit funds, or a direct investment, and then equity. Something which has evolved the last 4 years, and that's where in global context, private credit is one of the largest asset classes. BlackRock, Blackstone, KKR, Apollo. You guys associate KKR and Apollo with what? Private equity? Whenever people talk of KKR or Apollo, what do you guys think of them? Private equity firms? But they're not actually private equity firms. You know what is the largest asset class? Private credit. Anyone has a chance to read through BlackRock's annual report, you should look at it. It's fantastic. BlackRock or Blackstones. You should see where their focus is in. They run a $10 trillion, probably $11 trillion AUM today. You know where their focus is now? Private credit. And this is not their first attempt. But global private credit is very different to Indian private credit. One cannot associate global private credit with Indian private credit. But having said that, why do we need private credit in a country like India? So there are lots of capital providers in our country, starting with the biggest one, which is the banks. I know you guys are NRIs, so probably you may not associate this too much with me. But today, if one were to go and ask for a home loan in India and say that I have 100 rupees of cash in my bank account, can you give 100 rupees for my home loan? The bank will still say no. You know why? The bank will say I can give only 80. Why? It's a regulatory requirement, correct? So the remaining 20, who has to put up? The property owner, correct? So that's what we call as something which a bank would like to do but cannot do. It's what we call as what passes a bank's credit filter but not a regulatory filter. So not everything can be financed by a bank. You want to do an acquisition financing, a bank cannot do it. You want to do a buyout of a private equity, bank cannot do it. You want to give money for a equity purpose, a bank cannot finance it. You want to give money to smoothen your cash flows in a company, bank cannot do it. There is someone else who can do it, which is uh, a non-bank financial institutions. But thanks to the equity markets, you guys don't value wholesale book, so they also don't do wholesale. They do a lot of retail. So that's a space which is vacated for someone else to do. Then there used to be the mutual funds. Between 2017 to 2020, the credit funds in the mutual fund category went up from 15,000 crore AUM to almost a 1 lakh crore AUM. You know what's the size of those credit funds today? It's back to 15,000 crores. Now, who fulfill this gap between 2020 to 2025? It's equity markets. There is a point of time. I mean, it kind of upended my learning of finance. The cost of equity was cheaper than the cost of debt. I've never seen it, at least in my 15 years of experience. But there is a point of time where raising equity is much easier than raising debt, and that happened. But but in the last few quarters, again things are back to normal. I'm not saying again that equity markets don't provide capital. Someone has to provide capital. People always tell me that India is a service economy, you don't need capital. So then they ask what services India provides. They say airports, hospitality, healthcare. But then I ask them, how can you run a hospitality service or a healthcare service if you don't have a hotel or a hospital in place? It's a service only when you have an asset, right? Someone has to finance that asset. Asset has to be financed, any country. So there are restrictions in who can provide capital and who cannot provide capital. And that's why we need this private credit as a space. So we talked of why do we need private credit? What is private credit? And now what is happening is a lot of people used to make investments in, I would say, mutual funds, FDs, individual bonds. It's changing over the last few years. People want to look at alternate pooled vehicles to invest in certain kind of, I would say, uh, fixed income nature. And that's where the Cat 2 funds have become a bit more active. But I would still pause here and say that we are still in the nascent stages. We are not very big. Private credit as a category in our country is very, very limited in scope, and there is a lot of runway to go. And I expect some accidents to happen on the way, but we will learn like every other time. This is a landscape of where do we fit in and what is the opportunity. Please don't get colored by the size of the opportunity. The size can be large, but not all capital will come from from the investors. I expect most of this capital to come from institutions because they can take those choices, they can make those investment calls, which probably an NRI investor or a corporate investor may not be able to make those calls. Few things which has aided in the credit space. The most important thing in the country which has happened is IBC and NCLT. So I used to work in L&T and IDFC. There were times when we used to give monies to groups like Bhushan, CG Power, and we never ever imagined that they will lose their companies, ever. You know, there is a simple statistic I will tell you. There were 36,000 companies which filed for insolvency code. insolvency code. You know how many actually went through that process? 8,000 companies. 27,000 companies settled out of court. You know what that means? That means that today a promoter believes that if he does anything with a creditor, he will face the choice of losing the company. And that's a threat which was never there before 2015, 2016. Was never ever there. People tell me that people always ask me a question in my fund, what is the security you take? What is the cover, security cover, the choice of words they use? I tell them that I'm not in the business of enforcing security. The reason being, if you are going to run a 4-year fund, and if I'm going to believe that I'm going to enforce my security and return the money back to my investors, probably I'm living in a fool's paradise. So what is very important is the threat of losing a company vis-a-vis dragging it through a court process. These are very two different exercises. So that's one of the most important events in the as a nation we have evolved more than anything else. In a nutshell, there is demand, there is lack of supply, and that's why the private credit space fulfills it. It's a non-dilutive, to put it in very simplistic terms. It's not that simple, but I'll still make it very simplistic. It's a non-dilutive, customized, and a flexible pool of capital. But it's a fixed income instrument, which means the money which is given needs to come back on time and without any challenges. I touched upon this topic at the beginning. Everything is private credit. Everything is private credit. This is one slide which we as an institution follow. What we would like to do, what we would not like to do. See, in this business, there's no stop loss. Unlike equity, there's no stop loss. If as an asset goes bad, that asset is gone. Yes, we might have security. We would like to recover the money, but it's a very long drawn process, and by the time the investors will get bored, and the time value money will erode all the returns, all the alpha which one can generate. So what's extremely critical in this business is, who do you lend money to? We call them as sponsors. Business calls one can take. People have gone through business cycles. One can never predict an event like COVID. But if you lend money to right sponsors, to the right promoters, to the right management, generally you will not have challenges in working out. Second, very important is you have to know how do you get your money back. Now there is a plan A and there is a plan B. Plan A always doesn't work. You need to have plan B in place. Now the plan B can be anything. But if one were to rely only on plan A, it doesn't work at all. You need to have plan B. What we wouldn't like generally as an institutions, we don't like asset light businesses. We don't like giving money to greenfield projects because we are raising a 3 to 4 year capital. I cannot expect give money to a project which is going to start now and expect to deliver after 4 years down the line, because inevitably projects always gets delayed. And we do not want to deal with business groups which has not a great track record dealing with stakeholders. So the risk we run in this pool of capital is, being a closed-ended fund, you don't run a liquid risk, you don't run a market risk, you don't run an interest rate risk, but you run a credit risk. And credit risk is absolutely paramount. Credit risk does not come with any stop loss. It just hits you straight away. The alpha which is worked hard to generate will be eroded in a single investment. So portfolio, selection of investments, and your plan B is extremely critical when we do credit. Any type of credit, be it a mutual fund, be it a Cat 2 fund, be it a venture debt fund, it's extremely critical. I think I'm done. So uh, that's all the time they gave me. I would love to spend an hour, but it's too less. One of the shortest speeches I ever gave. It's not good if any market grows very fast, it's never good. Uh, I know people treat it as a great event for the markets, but it's never good. That means that mistakes inevitably will happen. Thank you. Yes, no, it's very good.
So now we have with us Mr. Vishal Gupta, who will take us on the real estate market in India.
So you need that.
I think in the world of financial assets, why should one invest in real estate? Is a key question as the world is evolving and we see the savings happening. So I think growing cities attract ambitious people, and one of the ways to play this ambition and growth is to invest in real estate. I think this august audience understands how Dubai and many other cities in the world which are growing at a very, very fast pace, attract this ambition. And this is how the city, as Dubai is a gateway city to the world, 7 cities in India are fueling bulk of the ambition of the fastest growing economy in the world. My name is Vishal, and I've been with ICICI Group for 18 years covering real estate. My hope and endeavor over the next 15-20 minutes is to educate you and tell you what are the broad trends in real estate which are happening in India, and how do we foresee what is going to happen over the next 5 to 10 years. So I think quickly, yeah, so Indian real estate is growing at a quite a fast pace. This sector is expected to hit $1 trillion over next few years. This is backed by stable growth over last few years. Interest rates have been stable, uh, and inflation has been under control. So I think why this has really happened, I think there is a lot of reforms which have taken place in the sector. I'll just touch upon a few 2 to 3 things. One is the Real Estate Regulatory Act, which has, I would say, instilled the fear of God, that if somebody will take investors' money for a ride, he will have to face a lot of repercussions. And we see the result of these reforms at this moment of time, which can show the next phase of growth. So with the Real Estate Regulatory Act, we see a lot of non-serious players who have gone out of the market. Number one. Number two, there has been a great push on infrastructure in the country. I'm sure when you guys travel, you see the quality of roads. The metro lines in India has gone up in a very, very massive way. So a decade back, we used to have a run of 250 kilometers of metro lines in India. Today, operational metro lines in India is about 1,000 odd kilometers, and similar 1,000 kilometers is under construction. So a lot of push on infrastructure. And lastly, and most importantly, there is an institutionalization of real estate in India. So what do I mean by institutionalization? There are global players. There are large institutions which have started buying real estate in India. Today, as we speak, there are 4 listed REITs in India, real estate investment trusts, which own $15 billion of real estate in India. This has led to a lot of corporate governance standards, discipline which has come. There are several sovereign wealth funds, including ADIA, and Canadian pension funds, GIC of Singapore, and global pension funds, which have bought commercial real estate in India in excess of $5 billion.
So this is a serious amount of money which is instilled governance and a lot of discipline. And as a result, the sectors matured. 60% of grade A properties in India are occupied by multinational tenants. And all these tenants go through a very detailed audit process at the end of the year. Now, this process of audit has ensured that most of the properties are following global standards, and those things have become a new norm. As a result of all this, India leases some 40 to 50 million square feet of office leasing. This is the highest amount of office leasing which happens in any country in the world as we speak. Just to give you perspective with Dubai, because you stay here, Dubai has leased 22 million square feet of office in the last 3 years. India does 40 to 50 million a year. As a result, because of this, wherever offices are coming, there is a demand for residential housing, and there is also demand for good quality retail so that people can have social services and enjoy themselves. So why is India being able to establish this? What has India really done? Why is India an office to the world? We think what China has been able to do in manufacturing, India has been able to do it on the services side. I think there are 3 to 4 key reasons why this has happened, and it is structural in nature. One is India has a young English speaking educated population, which is available at almost 1/10 the global average salaries. So we have large population, which is cheaper. There is an excellent digital infrastructure. What do you need to outsource your work? You need a great IT infrastructure, which is available in India. And lastly, Indian companies also continue to grow. As you know, ICICI, for example, we are growing at a massive pace as the country continues to grow. So there's demand from domestic players. There's a lot of outsourcing requirement on the terms of work, which is fueling all this growth. So what is this growth being offered at? ये real estate कितना भाव पे जा रहा है? So the average rental in India, in spite of all this growth of 2 decades, is almost $1 to $1.50 per square feet per month. So 80 to 100 rupees of rental per square feet per month is the rental which India is offering. What are global rentals? $5 to $7 per square feet per month. Dubai's average rental on office space is approximately $5 per square feet per month. So that is how competitive India is, and that is, I think, ability which is very, very structural in nature, and we think that has got long legs for the country to grow. So all this development which we're talking about of the being largest office leasing market in the country, 80% of this growth is captured by the 7 cities in the country. NCR, Delhi NCR, Calcutta, you've got Bombay, you've got Pune, you've got 3 such cities in the south, Chennai, Hyderabad, and Bangalore. The 7 cities. These 7 cities have 90% of large conglomerate headquarters. Over 100 unicorns have offices in these cities. And most of large corporations, multinational corporations, have their largest office campuses outside their home country in these cities. Be it Amazon, be it Google, be it Microsoft, be it JP Morgan, be it Nomura. And I can name you almost hundreds of corporations which have the largest office outside their home country in these cities. You'll feel very proud to know that Bangalore has been leasing highest amount of office space in the world for over 5 years. And that is the rippling effect of growth which these cities are continuing to see. So data is the new oil. I think no longer you need to make decision or intuition कि मुझे कैसे real estate खरीदना है. There is so much data available that you can make informed empirical decisions as far as real estate is concerned. You see the vacancy levels are coming down. Rentals have continued to grow the last 3 to 5 years, which is also leading to property value appreciation in these cities. So in spite of so much opportunity in real estate, which we feel, so much global capital of $25 billion, which has entered the country, Indian overseas investors still find it very, very difficult to invest in Indian real estate. I think a lot of reasons. You mostly invest through friends and family. Maintaining properties is very, very painful. Getting diligence done is very anxious process unless you understand real estate. And selling Indian NRI का property to 10% discount पे बिकता ही है. So that is the thing which people see, and so a lot of people don't kind of dabble into real estate. But I think SEBI has come up with a very excellent product line of AIFs, which allow a lot of investors to invest into Indian real estate. It's a regulated platform which gives you access to professional manager as well. Imagine having the reach and intelligence of a say ICICI or a Motilal Oswal or a White Oak, having the diligence process in place, somebody managing those properties for you. So I think it offers a great platform from an institutional buying perspective, and it also offers you a very reasonable ticket size. You can practically buy a fractional ownership of a property by just investing as low as a crore. Today, you'll buy any property, residential property in any part of country in India. It is like almost, you know, $500,000, so 3-4 crore rupees, at least utna rehta hai. So I think you can invest very low monies to have a diversified portfolio. So which are the ways people are usually investing? Obviously, one is direct. We have always been traditionally buying real estate directly. There are real estate investment trusts, which I mentioned to you. There are 4 REITs which are listed. This is $15 billion of market cap. Very good high quality properties, regular dividend distribution, liquidity being available. They come at slightly lower returns because of this large demand. And then could be an investment through AIFs, which can give you a diversified pool of investments, still making high returns. So how much does people invest and what kind of returns one usually expects by investing into commercial real estate? Our view is you end up making 15 to 18% kind of returns by investing into commercial real estate over a medium term, over say 5-7 year period. The returns are in form of regular rental income. The yields are almost like as high as Dubai. So almost 7-8% of rental yields are available on commercial real estate. These are properties which are leased to very large corporations who come and spend a lot of money on the property. They end up spending almost, you can say, 3 to 5 years of rental just doing the fit out of the property. So there's sticky tenants with long-term leases. There is a underlying escalation on the rental, and as far as contracts are concerned, there is a 4 to 5% of escalation which happens on these property rentals year on year, or a 15% every 3 years. This is standard lease clauses in India. So when your rentals go up, your commercial property values also go up because commercial properties get bought and sold on a yield basis. These properties, because they're ready and they are getting a regular cash flow on the rental, they can also be levered. Like you buy a property to take a loan to buy a property, we can also take a loan to buy these properties. That can give you another 2 to 3% because bank loans are very cheap in India. So you can end up getting another 2 to 3% kicker as far as these returns are concerned. So if you own a stable property with the regular rental income and some appreciation in rent as per the contract, you can end up making 15-16%. And in case some markets are growing faster, because India, in spite of all the growth, infra is still lagging growth. So there are pockets of markets which are growing at a very fast pace vis-a-vis others. Moment a metro line comes, the demand goes up because the traffic is still bad. Moment a new flyover comes, demand goes up. So there are few pockets of such opportunities in every city which are available. So we think 15 to 18% is the possible return which one can end up making in a real estate, commercial real estate kind of an investment. So we believe that 80 to 90% of real estate risk in India gets over once you buy a completed property. What is the most of the risk people face? In an under construction property, it gets stuck, construction is not happening, developers not built it to the quality which he has promised. But imagine you buying a completed property which is already leased out to a tenant. You can have a look and feel of it. It's completed. The possessions under your control. So we think the probability of losing capital on a completed property is fairly low. Number one. Number two, because of the underlying growth and demand in the sector, there seems to be an opportunity to diversify some part of your wealth into the sector. So any allocation out of your debt portfolio, what we see, can be made into this kind of an asset class because the probability of losing capital is low. You're playing equity through your other strategies, and you can end up making 15 to 18% kind of a return in an alternate strategy like real estate, which can give you some degree of stability in the portfolio as well. So I think that's it from my side. I thought we just add this to your understanding how Indian commercial real estate is doing. I think it's doing in a phenomenal growth phase with a lot of institutional participation, and it's one of the largest markets of office in the world. Thank you so much.
Vishal manages obviously the optimizer fund for ICICI. And one thing that is unique to this real estate is that it's commercial real estate, which we are not usually exposed to. We often buy residential real estate, but commercial real estate is an asset class that does not come into our portfolio. It's one of the unique avenues diversify on the asset class level. So thank you so much, Vishal. And yeah, we'll just take one question because we are running short on time.
So when the rates being launched, I was myself quite confused. That's a very extent in class. Of the rates. So it's almost 8, 9 years. So why? I mean, see any
No, so I think REITs are an excellent vehicles, and I think as AMC, we are one of the largest domestic owners. We own almost 5 to 10% in each REIT listed in the country. Unfortunately, I think most of us expected linear returns. कि मुझे इतना rent आएगा हर साल और मुझे इतना appreciation होता रहेगा property.
So that is what we were expecting. However, that has not happened. The returns haven't been linear because there is also a little impact of listed markets in the entire space. And I think REITs, we believe, is an active trading strategy. You have to understand what cycle to enter into and when to exit. But if you want to buy and forget, you have to buy real estate in general. So that is what I think the reason it has happened. It's not giving you linear returns. But if you see over last 6 years since the REITs have happened, I think you have ended up making 8 to 10% kind of returns, and that is the kind of returns people are expecting. Listen, commercial properties which are unlisted in space will give you a 14-15% kind of a return, and REITs will end up between 8 to 12%, depending on the cycle you enter into, because that's the cost of liquidity, what you are entering.
Vishal is with us for the entire team. We can take the questions offline because they're running. Vishal and Jagat, if you can please come, and I would ask Srinivasan to take them. Jagat, if you can please come. So now moving from wealth, now we move to an important subject on will and succession planning. And for that, we have with us Mr. Jugal Popat, who is the founder of Viljini, and will take you through estate planning in India as well as Loop. Welcome, Jugal.
Hello. Hello, hello. Hello, 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 hello. Hello, hello. Yeah. Yeah, okay. Hello. Hi. I also okay. There's a YouTube mic. Okay. I'm audible? Great. So we've talked about where can wealth go, FD में डालना है, real estate में डालना है, where do we have to put it? Do we put it in equity, mutual funds? I'm asking the single biggest question, घर पे किसको देना है wealth? Okay, that's what we are answering. The biggest question that everyone has in the family, who will get the money that you're building? Who will get the money your parents are building back home in India if they are in India, right? Uh, I'm from Vilgini. I'm the co-founder of Vilgini. We are India's biggest company that does wealth and estate planning. So we're into succession services, and I'll take you through some very important points that you as NRIs would need to question upon. So आपके table पे जो NRI health score दिख रहा है, legal health score, is what we are suggesting you to think upon, to give couple of minutes to question yourself. Have I sorted these things out for myself and my family? Okay. Interesting statistic. India में unclaimed assets, families did not know about this wealth, is at a staggering greater than 50,000 crores. Okay. Grandfather had some shares lying in the cupboard, family did not know about it, got lost. Someone had FDs lying, they passed away, family did not know, FD sitting with the government. So we're saying having a succession plan is not just for who will get what, but for the family to know, yeah, what did you have? Right now, when you've spent 15, 20 years of your life building a corpus, you yourself would have forgotten some demat account opened somewhere, some savings, some FD opened 15, 20 years back. So imagine your spouse, your child would not have a 100% view of what you've built. Again, the legal inheritance process in India is very murky. You would see the number of years it takes and the number of cases ongoing for the inheritance and probate matters in India across metros, non-metros, everywhere. We're saying that the problem is arising because people are not writing on a piece of paper what they wanted. We're solving this by just giving you and enabling you by writing a will. Okay, we're saying please start with a will. Don't complicate stuff. We'll start one by one. So one first step is will. Why plan now? So I covered this in the first two parts only. That one is life care of parents, yourself, and your next generation. Okay, someone's mother is worried about her. So yeah, we're saying like life care of parents back home in India, life care of your kids after you is also very critical. Next, can you close WhatsApp if possible from your desktop? Mom is worried, huh? Back home in India. I'm sure all of us undergo that. Great. Okay. Okay. Right now, we do not have any inheritance taxes in India. India में अभी inheritance tax zero है. But with a good proper succession plan, any future inheritance tax that may come in India, and we'll talk more about it, can be mitigated. Any future challenges that may come from family members, दूर के रिश्तेदार, siblings, within kids. I know the rarest of rarest chances there, but why leave an iota of doubt amongst family members? Smooth transfer of assets to the family and 100% fulfillment of your wish is core objective of having a proper succession plan in place. Yeah. So right now, why are people not writing their wills? Why are people sitting in this auditorium? Have they not written their wills? Three reasons. One, not sure how to begin. Who do I go to? Kiske paas jao? Who do I trust with the money that I've built over these years? And they don't misuse that information. Today, there is no single wealth manager that you would know who would know your entire estate. Someone knows half, someone knows the other half. But the will is the only document that has entire of your savings. So you need someone trustworthy enough who will not misuse this information or upsell you into things you don't want. Secondly, delay and procrastination. यार अभी घाई क्या है? I'm still young enough. What's the rush about? I'll write when I retire. I'll write when I'm on my deathbed. And the thing is, Bollywood and ads have given us that image that a will is that document while I'm writing, I'm on my deathbed. There's a water drop falling on the will. So we know all that ad, right? Exactly. So we're saying it's a simple piece of paper. Don't dramatize it. It's no melodrama. Just like you buy an insurance policy, just like you buy or file your taxes every year, just review what's your succession plan. I'm sure you all have nominees on your assets. You all have nominees on your DMATs, mutual funds. What is nominee? Who will get that asset after you're gone? A will just completes that entire circle legally. And yeah, some doubts and myths. So we'll clear some doubts and myths that you have around succession planning. Just quick background. So Viljini has been doing this for the last 12 years. We've served almost 20,000 customers in and across the globe from 480 cities and 32 countries abroad. The channel partners that we have are HDFC Group, Tata Group. So all these institutions that we see, their clients get their wills made via Viljini. So we are their official succession planning partner. We've been covered in media all these years because nobody else is talking about this. It's a very sensitive. Yes, sir. Sorry. You need a mic? Okay. Can we probably take some questions in the. Okay. I can hear you. Yeah. Yes. 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 Okay. So one is Ankit is here. He can guide you to us. You can reach out to us. You have our brochures out there. We've put it. But Ankit and your team at Wealthy Nivesh is your point of contact for that. Uh, so I'll talk about how long does it take for us to get your will done. But just to give an idea, 7 to 10 days is what it takes for us to plan your estate for Indian assets. And for Dubai estates, there's another process for that. So we can help you in that also. Sir, if you don't mind, can I take questions towards the end, please? So that I don't miss out on important points. Okay. Inheritance tax across the world. Look at these mind-boggling numbers at the countries and the amount of money the government seeks from your estate if you don't have a proper plan in place. South Korea, US, 40-50% of their estate of a person who passes away passes on to the next to the government and not their kids if they don't have the right structure in place. UAE and Middle East, it's a little murky. People are confused. How does Sharia work? Does it apply to me? I'm an expat, I'm a non-Muslim, I'm a Muslim, can I write a will? These are some questions that people have, and we are here to clarify those questions. India, as of, okay, great. As of today, there is no inheritance tax in India. It's zero. Even if you inherit 100 crores of wealth from your, uh, predecessors, that way you don't pay any tax to the government. But we've been hearing in circles, political circles, people want to tax, and we all know how Nirmala ma'am loves, you know, just gifting taxes to people. So we don't know when and if it may come. We would want that a proper plan is in place. Uh, Quickly, what are some tools of succession planning? Uh, so what we are saying is will, of course, the most simplest, and every household should have a kind of uh, document is a will. Second, we're talking about is a family trust, a slightly more enhanced version of a succession plan. If you've heard of HUF, Hindu Undivided Family, a family trust is like a HUF on steroids. Okay, plainly put. I can spend more time on it, but that's a feeler for you. Okay. Thirdly, gift. Will is saying after I'm gone, who should get the money? Gift deed is saying while I'm alive, please give it to this person so that there is no issue in the future. And the trust is in between. That I want it to be given to this person. While alive, I'm creating that structure. So I'll talk about it. And finally, there is power of attorney. I'm sure a lot of you have power of attorneys in place. If you don't, it's a good thing to have so that in your incapacity, in your inavailability, unavailability in India, decisions can be taken on your behalf. Some laws that Indian system considers is succession laws. So Hindu succession law or the Sharia law or the Indian Succession Act applies to people. Secondly, FEMA laws if there is cross-border wealth. And finally, tax laws if there's a family trust. Okay. I won't speak a lot on this because this is our job. This is what we'll do for you. Your job is to understand that I need this. Now, what do you need within succession plan is what our team guides you on. Talking about private family trust. Okay, I'll go little slower here because this is something that we tell all NRIs to think about and have in place. What is a private family trust? See, a private family trust is like a new legal entity that you're creating. For example, you create a private limited company in India or you create an HUF. This is exactly the same. So if my name is Jugal Popat, I create a Jugal Popat private family trust in India. I get its PAN card, I get its bank account opened. This trust can buy assets like mutual funds that we've been listening to. It can buy real estate, it can buy gold, it can buy bonds, anything on the planet Earth that you as an individual can buy, a trust can buy. Secondly, what you already own, if you own equities, if you own mutual funds, you can transfer it into the trust at no charge. Okay, so what people are doing is they're creating this trust, slowly transferring their wealth inside the trust so that the day they are no longer on this earth, their family can immediately start using it from the very next day. So no legal process has to be then done. So जीते जी मैं चीजें sort करके जा रहा हूँ, I'm clearing stuff out while I'm alive is the purpose of a trust, and you can control how the wealth will be used after you're gone. If I say that every year my child should get 50 lakh rupees out of my trust, the trust will operate that way. If you say at the age of 30 years, disburse all my wealth to my kids after they've grown up, then and close the trust, that is how the trust will operate. Until now, the the trust was an inaccessible entity. Ratan Tata, or let's say the Birlas, the Reliances of the world were creating trusts. People had heard about it, that there's something like this available, but they didn't know is it applicable to me or not. We are saying, let us show you some benefits about it, and if you feel it's worthy of making, you should explore that. So let's look at difference between a will and a trust. This will clarify what conceptions that people have about having a family trust. Number one, a will is a basic plan. It's a single piece of paper writing all your assets. Whereas a trust, it's a secured succession plan. Very important to note, a trust cannot be challenged in court. Will, even if registered, no matter at the embassy here or at the registrar in Mumbai, Delhi, wherever, the legal heirs have a right to challenge it. Then whatever time it takes in the courts. But if a trust is made, whatever I've mentioned has to be followed by the family. It cannot be challenged. So that is the core benefit that people use a trust for. Secondly, will is a single document of all my wishes. A trust is a separate legal entity, right? So I'm creating a new structure. Then we have will is a fast and simple process. Within 30 minutes, you can create a will online, or you can create a will with a lawyer in our team for like in 7 days time. A trust takes around 15 to 30 days because structuring and all, there's to and fro of thoughts that takes place. That's how it works. Finally, a will can be created by a legal professional. Trust takes a joint working of a chartered accountant, a lawyer, a tax professional if needed, right? So depending on the use case. I'll move on to the next part. Simple plan. Okay, let's take an example of what you sitting here can make for your family. For this, I'll just call on stage Jatin sir. He's our founder and CEO and a lawyer and company secretary by profession. Also happens to be my father. So I'll have him take a couple of plans for you. Yeah, you can hold it in hand. This is pocket.
So I'm already in the process of a succession of my business, and that's what we all have to do when we are reaching 50, 55, 60. आगे जाके क्या होने वाला है पता नहीं है. Today we are seeing mutual fund industry, share market, we are seeing uh, private credit, we are seeing all the commercial estate, everything, all the portfolio. And fact is, we will have to keep it here in there. That the facts we all should note and we should act upon it. We have been doing a financial planning for mutual fund stocks. We are doing this kind of seminar every now and then. We meet tax consultant, we meet insurance consultant, everything we do externally. But this topic, which covers all your wealth, all your business, all your assets, I don't think have spent enough time or thoughts. So this is, we are here to tell you that please start thinking on that when and what to do, it will follow. So this is the, we are just creating Jago awareness campaign, Jago re Jago. So that is where we are here. And with regard to the simple plan of NRI, so basically, so first of all, let me ask you a simple question. How many here in this group are residing in UAE and they are non-Muslim? How many are? Almost. Uh, anyone Muslim expect in this group? Okay, yeah. Any Emirati, the local? No. Okay. So I think rest all are from India for attending this seminar conference. So this is something great to know that expect Indians, non-Muslim, who are residing in UAE, where they have questions on their assets in UAE and their assets in India, and how to do the successor planning for both the thing via will or whatever. In India, we are talking here right now is something creating a private parameters. So the family trusts normally have managers. So the manager can be your own self, your family member, uh, people like us who are professionals, and the assets that you can transfer, that can be all of your asset, you can do part of your asset. So this is something very unique thing where nothing to worry whether somebody will challenge or not, whether there will be uh, government process or not. The family trust is something which is the advanced version. Today we are seeing all the places the advanced version are coming. So will is something can be uncertain, but yes, family trust is a very certain inheritance. Um, in creation of such trust, you can make your grandparent, parent, anybody the settler, and then you can be a trustee. The beneficiaries can be you, yourself, your parents, your kids. So this is a very simpler way that one can do a trust, which is created by the family, operated by the family, and for the benefit for the family. So this is a very unique way. We don't supposed to need any outsider. If you want professionals in India or somewhere, there are your friends, relative, a chartered accountant or a lawyer or a company like us that we can help out. So this is something which you can do, and this the detailed next one. Yeah. So I think there are few of the simple trusts that we normally suggest are the holding trust. So what is happening? We have been working with large number of people so far, and we realize that current scenario where the kids who are say aged about 15, 20, 30 years, they all have their independent life, career, education. So what we are suggesting to them that let's make a two separate trust for each of the kid, or maybe if you three kids and separate for each one for the business, one for the personal wealth. So this type of combination where you can hold most of the asset in your personal wealth You can have a separate trust for business so that business can grow continuously for many, many, many decades and the wealth start coming into the family. And each of your kid have one trust. So it's like, if you have a lot of jewelry at home, normally you can create one or two or three lockers in the bank so that one for one kid, another for another kid. The same way, we are creating a separate family trust in each family trust for each kid so that in future they don't have to depend on each other. There won't be any conflict and they will live it till they become 50 years or they may be 40 years, whatever you mentioned. So this is a very unique thing where the conflict and use of the fund exactly what you displayed. Also, the rules that you mentioned in the trust is supposed to drive. You are not here in this world, but you can drive your wealth for many, many decades. Since same thing has happened with the Tata Trust, I think 150 years have passed and Tata Trust is still going on and on for the business, for the companies, and the family. So this is a very unique thing, which is where I think we are seeing almost 50% of the family they approach us when we explain to them they select this option because this is a very confident inheritance with a very practical way because today the kids have their own life and which country they will go, what they will do, we all don't know. And this is where they can make their own life, career, investment and business. Yes. Point number four. Previous slide. So, so why the trust? Why the trust to be created? So there are 14 reasons, not four. There are 14 reasons. Number one, which normally a special child. Anybody having a special child, they do this type of trust regularly. People they want to create protect the asset from the creditors. The people into business with the large loans and all, they want to protect their personal wealth. So that is something they do matrimonial cases which are going up and up and up every now and then. So even the planning, people are also planning that okay, I'm getting married and I don't know tomorrow what will happen, or my kid is getting married and I don't know what will happen, and we don't want any personal wealth to be attacked by on the matrimonial claim. So these are the few of the examples where the estate need to be protected well, and this can be done. The I think many of the Muslim family person they are unable to write a will because of the Sharia. So in India they do trust, and in UAE they are creating a foundation. So these are the few of the examples for what need waste. Normally, people which say in India 10 plus crore of the wealth, normally they decide trust than the will because they don't want to take a risk on all the asset. So they do create a will, but they create a trust and transfer 60, 70, 80% to the trust. So this is a very safe, they're already safe in inheritance done for those assets they have transferred. And taxation also favored. There is no gift tax, there is nothing a problem. So it is a very unique and very good way of planning, a very strong planning instead of doing only a will. Just I'll take the over it.
So I could talk about how long does it take or how implemented. So typically it starts with advisory what kind of a trust is needed to guide you on that. Then setting up the rules of the trust, drafting a trust deed, coming to signing of the trust, then registration of the trust anywhere in the country. Then we look at thank you. Then we look at obtaining a PAN card, creating a bank account for the trust, and that is when the trust is ready. So typically around 20 to 30 days, depending on how long you take to decide, and we guide you throughout the process. This is timeline. Very quickly, estate plan for UAE, people have some misconceptions. So I'll cover that. So if an individual has a will made, okay, for the UAE estate, let's look at how much it costs. After making of will, whenever the time comes, the family has to apply for a probate of the will, and that costs that takes around 3 months time at max, and the entire process takes 20,000 dirhams, okay, which includes the probate of the will at ADJD jurisdiction. So we've taken ADJD as our benchmark. DIFC is expensive. Dubai court is difficult, orthodox. So ADJD is in the center. It's the median that we're covering for. So that is the cost that your family or your estate will bear if you have a will made. Now let's look at the other side of it. If no will is made, your family gets two choices. Either they choose Sharia for the inheritance, or they choose the home country law. In our case, let's say it's India. So the family tells the authorities here, okay, we want to do the inheritance as per the Indian law. So what they have to do is they have to hire an Indian lawyer, prove the succession in India, communicate that to the lawyer here in Dubai. So they have to hire two lawyers. And then the Dubai lawyer will explain that to the Dubai courts in Arabic. So the entire process happens in Arabic. The entire process takes 1 year's, 1 to 2 years time. And yeah, home country law takes 2 years. Sharia takes 1 year. So the important part, it takes.
The will you have to do in UAE doesn't take 20,000 dirhams.
So that is probate cost, not the will cost. I'll come to the will cost. This is the cost of a probate. Yeah. So that is a difference. Basically, will made, that is what the family ends up paying for the probate. Will not made, this is the starting cost that the family will have to incur in terms of inheriting the assets. Now let's look at the pricing for making the estate plan. Okay. So the cost that we charge for the Indian estate and for the UAE estate is as follows. So I have mentioned it in dirham so that all of you get an idea how much is it for. Uh, so the UAE estate, we typically work with our local partner, our trusted local partner. So I have Sandeep ji who's also here. Sandeep ji, can you just wave your hand and just stand? So myself, Sandeep ji, Jatin sir will be around in case you want to talk to any of us. But that's typically how we work. Indian estate and Dubai estate, we recommend all of the families have two plans, one for the Indian estate, one for the Dubai estate, so that both processes work independently at the time of execution. Yeah, so I'll take this forward. And finally, besides inheritance, we've seen that people have issues around property matters, banking matters, uh, things like that. So we're saying that we can help you out in those things also. Anything in India that you have needs support in terms of business filings, personal matters. So we have a team of in-house lawyers that do this. We have 25 people in the team across the country which are on our payroll. So we don't outsource it anywhere. And that's how we can help you out. That pretty much covers things, Aditya. And yeah, I'll leave it to Aditya if we can take questions. Otherwise, me and sir are here. I'm sorry, I don't want to take up the time. I'll leave it to you, Ankit, Aditya, please. Ma'am, I know it is really strange. They have very little time, and there's one session pending. We'll discuss this after this. I'd like to answer, but we need to finish the session. Please, Aditya, take it. Okay. Thank you so much, guys. Thank you so much.
Thank you so much. Now we will let me invite Mr. Amit to facilitate the vote. So next we have Mr. Prashant Rajaratnam from Delhi, and he will talk about gypsy. And it's a very uh, interesting topic, particularly for non-residents, how the gypsy is developing in India, and how you can facilitate your investments directly through your non-based account through gypsy. So I'd like to invite Prashant on the stage.
Thank you, Wealthy Nivesh. Good evening, ladies and gentlemen. I understand a lot of hungry stomachs around, so I hope I'll keep as brief and interesting as possible. So I'm Prashant. I'm Prashant from Mirai Asset Investment Managers. I manage Middle East business for the AMC. So I don't know how many of you are familiar with the name Mirai Asset. If anybody could raise your hands, please. Great. So those who are not familiar with Mirai, I'll just quickly take you through Mirai as a group. Mirai as a group, we were formed in 1997. By the name suggests we are not an Indian origin. We are a South Korean by entity formed in Seoul by our chairman, Mr. Hyunjin Park. So he's actually literally, if you Google him, like if you type in like who is the father of mutual funds in South Korea, his name will pop up. So that is how phenomenal he is. And it is from that humble beginnings that we have grown to be a financial empire across Asia and developed markets. So as we speak, we are in almost 20 countries, and globally we manage close to about $600 billion of AUM. In India business, we started off in 2008 as a active mutual fund manager. Currently, we manage close to about more than 2 lakh crores of AUM through rupee mutual funds and debt mutual funds, which is roughly about $24 billion. So our AUM has grown at a CAGR of 36% in the last 5 years, purely based on the consistent performance that we've delivered in the markets. Now, as far as today's topic is concerned, I'm going to touch upon something little unique. Before me, Ashish, Ankit, even Deepak touched upon how important it is to spend time in markets, not timing the markets. So actually, they make my work more easier in saying what is the best vehicle for you to get into the markets. So that is through my particular fund through Gift City. So what is Gift City? What is Gift City? Can any of you just quickly tell me what is Gift City or what is the full form of gift? Gift City stands for Gujarat International FinTech City. It's a international financial service center, something like what we have of DIFC or ADGM in UAE. This is a unique proposition in India. It's really gathered momentum in terms of a lot of financial services firms setting up base in Gift City. So one of the unique thing about Gift City is that there are 15 currencies permitted to be transacted in Gift City. Can anybody guess the only currency not permitted except Pakistani rupee? It's Indian rupee. So obviously with the international financial center kind of a stature, it is about attracting more global investments and foreign capital into India. And coincidentally also Gift City supports in resident Indians investing abroad as well. So which also is taking shape as we speak. So Mirai, we started off in 2023 with a Gift City branch. So we currently, Mirai globally, we also have few UCIT strategies, CCAV funds centered around Asia and India. So we have moved the sub-management of our CCAV fund called India Midcap Equity Fund based in Luxembourg to Gift City operations, which is around $267 million of fund. And we currently, about a year old, we have our first India bound equity strategy managed from Gift City. And we are, as we speak, we are in the process of having a fundraise for a global fund launched in Gift City for clients and investors in India. So typically, as most NRIs, what are the key pain points you feel when you invest into India? The first thing I experienced about few months back was, why is your PAN and Aadhaar not linked? How many of you have experienced the same issue as NRIs? I'm sure most of you have. And the documentation to clear that, it's really a pain at times. So couple of things unique about Gift City is that we don't really need your PAN card, we don't need your Aadhaar card. It purely runs based on your whichever nationality passport you're holding, because this particular product of us, the first one, it is even allowing foreign investors to invest into India through our fund. So it's just purely based on your passport, your bank statement, your address proof, and you're all set to go. In terms of taxation, generally there is a notion that in GIFT City, anything and everything is tax exempt. But however, that is not the case. Entity setting up business in GIFT City on their corporate income, yes, there is a tax window of 10 years. But when you're going into a fund or a vehicle, it depends on what the fund invests into. It depends on that the tax exemption applies or not. So for our strategy, which we launched in GIFT City, it is a fund of fund structure where the underlying GIFT City fund holds Mirai rupee funds. So as per GIFT City regulation, there is an exception whenever we churn the portfolio on the underlying rupee funds level. So there's a complete capital gain exception available on short and long term, right from the rupee fund as it is to GIFT City, and naturally you being residents of UAE, it's 100% exempt. So we were one of the first asset managers to come out with a fund of fund which is 100% exempt for investors globally into India. And actually, with the ease of remittance, the fund which we have a NAV published every day. If a client wants to redeem, it's just a NAV multiplied by units. Remittance hits your account in like T+2 or T+3 days. So it's that easy. There's no need to take it back in NRI and repatriate for yourself. So what is the fund about? So when we wanted to launch a first fund, there quite a lot of deliberation we had on should we have a fund feeding into one particular strategy or should we have a fund catering to the entire market? So we came out with this strategy which it invests into 5 rupee Mirai funds, large, mid, small, manufacturing, consumption. So the idea behind this is that this gives a complete representation of Nifty 500 for the investor. So from a global investor's perspective, if a person is coming to India, he is looking at India growth story. And Deepak, Ashish, Ankit, they've covered beautifully why India is the bright spot. Now, for a foreign national, if you tell him, please invest in a mid-cap fund, on a global scale, mid-cap as a theme is very relative. Like Reliance Industries, which is one of the largest of $200 billion of market cap, is still 1/20th of NVIDIA. So it is really not correlatable for an investor when he is looking outside India to India. Hence, we wanted to give a complete picture. So this particular strategy will cover Nifty 500, not just the large or mid. So as Deepak from Motilal covered, that most of the new age companies, the next HDFCs of the world, is going to come in the small cap space, which we're going to see. So how do we capture that? So as a NRI, do you have the time to sit and research day in and night, leaving aside your work and business and to find out future multi-baggers? Or which fund is going to perform next CAGR 30% in the next 2 years? How many of you can do that? Even with the help. So it's a very time consuming and challenging process. So right now, even most of Indian investors, if you go to India to invest, you say, I take a position in mid cap or a small cap fund. Over a period of time, you feel as per your advisor's recommendations, okay, mid or small is run up too much. And I have to rebalance my portfolio. One, you'll have to do a proper research with your advisor, redeem, incur tax incidents or short or long-term capital gains, then find an alternative fund where you could deploy that money. So what we do is that we have a fund manager who bases the valuations, he keeps shifting between these strategies. So for an investor in this, it's a one-stop shop into India. He doesn't have to worry about valuations of mid, small, or large, how high it has gone, whether it go down. So we have set a certain base rules, like the fund manager can look at a large cap exposure of at least 40 and you can go to max of 60. And for mid and small, the same. So this gives a fair enough of room for him to maneuver the fund to generate good performance. So as of this is slightly dated, but the current figures are almost more or less same. Right now, the portfolio is looking at close to about 40, actually close to 50% of large, 26% into mid, and rest are the same for small cap manufacturing consumption. So what this gives is that the portfolio gives a very stable stability to the portfolio through the large cap exposure and excellent alpha generation to the portfolio through mid and small and the two themes which we add. So when we came out of this fund, so we naturally, since underlying 5 strategies have been running in the market, we could easily do a backtested data of what if this fund was there before? What kind of performance would it look like? So when we compared it with the large cap index and the Nifty 500 across time horizons, you can see this backtested model, that is this particular fund, is outperformed. These are in rupee terms, this is in dollar terms, not in dollar terms. So technically speaking, keeping it simple, having a portfolio manager mandate, managing it through valuations, we can easily generate this kind of performance without timing the market, without mixing up your portfolio. So what are some unique things about this fund? So in Gift City itself is relatively new. In the last 18 months, we are the first asset manager to come out with a fund of fund, which is totally tax exempt for investors. The strategy invests across market caps, doesn't cover just one particular segment. And the entire onboarding of this product is a digital. So wherein a client sitting in Australia or say in Europe, sitting at his home, he can onboard this fund. He doesn't have to do 100 signatures, doesn't have a huge booklet to sign whatsoever, nothing. He just have to have the documents, KYC documents notarized and sent it to us. And the entire process created digitally through a link, client accesses it, approves it, documentation is done. Is that simple? And one key aspect for UAE is that since we are all part of UAE, we are the only GIFT City based AIF approved by the UAE regulator for private placement in UAE. We are the first and only one as of today. So as we speak, we are also coming out with a global strategy which invests into developed markets. So Mirai as a group, we have a quite large footprint in passive markets as well in US. So one of our sister concern called Global X, it manages close to about $100 billion of ETFs in US. So through them, we have set out a portfolio which will give you exposure to most of the modern themes which we are aspiring to have. For example, semiconductors, disruptive materials, defense tech, AI, blockchain. These are all the new age themes which anybody wants to have in their portfolio. 6, 7 years back, some of these themes you couldn't even have a position taken because there was no listed companies then. So these ETFs are running since quite long. They all have an underlying of close to collectively $10 billion of AUM, and they're already doing well. So as we speak, we are in the fundraise stage. It is not yet live. It is still ongoing process. So with this, I'll just take a pause here. So if any questions, happy to answer.
Going to Gift City versus a UAE guy with UAE NRI investing in India with a normal fund, the taxation is zero. Whereas Gift City has a condition of providing investing at least $150K minimum investment, right? Whereas an NRI can invest in $10,000, right?
Absolutely. See, in Gift City, when you go, I don't need a TRC. I don't need a DTA document. It is as simple, straight redemption process, just like you redeem your rupee fund. So straight away, it's dollar in, dollar out. That is the first. It's an AIF. So see, Gift City is new. So when the regulator is setting out a new jurisdiction, they want more professional investors to come in first, not the retail. No, we have a provision to include, but right now we've just come out with these 5 funds of large, mid, small manufacturing consumption. However, the mandate permits us to have even multi-asset manager funds also in our portfolio. Is that flexible?
So
It'll come to your Mashreq, ENBD, FAB, whichever account you want. Yes. The NAV is published every day in a website. So you want to redeem today, say today the NAV is 11, for example. That multiplied the units you hold. And as per dollar remittance, I think T plus 2, it should hit your account. A lot of discussion is in place. Naturally, even the regulator is looking at a lot of appetite from a retail perspective. I don't know by when they will come out with. Hopefully, they should do it soon. Yeah. Yeah. Absolutely, absolutely. So if you see in UAE, you go to walk into any UAE-based bank. Any bank for their wealth management, they don't entertain a client's transaction below $200,000. Generally speaking, from a from a priority client perspective. Yeah, through their one of their platform wrapper products that they have. But traditionally, if you look at wealth management, I mean, it's a average ticket size. Yes, from an Indian perspective, yes, it could sound like, yeah, oh my God, it's 1.4 CR at one go. But what we're giving is, it gives a complete representation of market. You're not investing into only mid or only small. So with this product, client will not have to look at another allocation into India. Exactly. And portfolio manager manages it seamless.
Options to invest via
Yeah.
website.
Yes, yes. So adding to that, so basically we have three modes how a client can enter. He can give a lump sum of
It's very good. This time that it's so if you're the finance analyst, and then things in when certainly in the future industry, getting the domestic sales of domestic, there's an acceptance. So, in India, what is the example of tax system? Usually, there is an example of tax system. Then, resident of Mumbai to the next. So, census is very costly. Even the problem will also have. So, that's from our Indian arts perspective. So, as per the decision, we can again, as an Indian England also, there is a tax sign of the office. Mumbai is not moving from so, so we take coming on that, local farm back or something on this that's about. So, when you make combine non-stop, that will work. So, it's for the grounds. Is that's all. Staying in this farm, we include more than half something plans for the and almost 40% of the plans are millions. We have lines from UAE nationals, European nationals investing. So historically, they come first going means it's an excellent means then volume or similar. When you say that, when you spend that here with the euro yeah, the fund business, it's not like that. So this strategy is an shown is there even yes, then performance. What we want is a global fund which invests globally in US and for innovation one the management is considered very easy and two will be stuff. You can know this size. One product is sort of selling it, so the Indian product is not going to be you are more confident with Indian fund manager. Like, the scientists will understand. But how many dipsity account and NRI can force? How many dipsity account? Yeah. Like different banking reports, I'm thinking about the food. Yeah. So what wrong for you? See, I'm already having another dipsity account. Can I open a new? Then, so there's no limitation. Like, some we don't get joint applications. So, so what I'm saying, I'm already holding no, that's not. So there are no, but I'm really intense. Um, and then I'm going to sometimes, and then it's really like,
Thank you, Mr. Prashant, for showing us how Gift City is shaping the future of investments. And with that, we conclude the formal part of this evening. Now, we would like to felicitate some of the people, some of our clients. I would like to invite Mr. P. Srinivasan. I would like to invite Mr. and Mrs. Ashish Mahajan and Mr. Jagan A to felicitate them. Jagan sir.
Jagan, if you can just wait.
Now, I would like to invite Mr. Jitendra Jehi to receive a small token of thanks.
Can move on.
Now, I would like to invite Mr. Ashwani Gupta to please come over the stage and receive a small token of thanks.
Ashwini Zulfiram को बुला लीजिए।
Now, I would like to invite Mr. Ashwani Kumar. Now, I would like to invite Mr. Chirag Sejpal. दोनों बैठे हैं ना? Now, I would like to invite Mr. Makrand Prabhalkar. Now, I would like to invite Mr. Sanjay Goyal to receive a small token of thanks. Mama. राहुल को बुला लो अब यही तो बैठा है यहीं बैठा है ना राहुल विशाल गुप्ता सॉरी श्रेय भैया श्रेय भैया को बुला लो और मोहित यादव को बुलवा लो घर से जरा Now, I would like to invite Mr. Shrey Goyal. Now, I would like to invite Mr. Chirag Sejpal.
तू बुला लो एंडिंग स्पीच के लिए और ये इन सबको देना मैं जाती हूँ उधर ट्रॉफी देने के लिए
So, you said it's very common, like,
चलो तुम लोगों की ट्रॉफी मैं लेके जाऊंगी ठीक? चलो मकरन सर तो गए ना नीरज गुप्ता नहीं वो भी नहीं आए मोहित यादव है बाहर उनको बुला लो एक बार अंदर
बहुत कार्गो भर के लेके तुम लोग इंडिया से बहुत कार्गो का पैसा बहुत लेके आए हो इंडिया से ऐसा लग
सर सब अपने लगेज में लेके
सब लगेज में आ गया ना
आए।
सीधा
लेके आए हम लोग।
of our
मेरी फोटो
employee come here what Star Wars, and because of them they are able to organize an event. And I would like to invite so now I would like to invite Mr. Paresh Kanatra to facilitate our employees. So
So first, I'd like to invite Namrata, who heads operations at Wealthy Nivesh. Namrata is one of our first 3 employees. And I always keep on saying this thing about Namrata. Let's have a clap first for her. So 2 things about Namrata. First, more than us, our clients interact with Namrata and they are very happy. Second, when Namrata joined us, we were getting overwhelmed with work, but after Namrata joined, there have been no instance when we have been overwhelmed with operations work. So there have been times, so even for this event, Namrata stayed back till 10. And my favorite story is when we were shifting offices. That was, like initial first or second month. And we were shifting offices to ensure that when me and Aditya goes the next day, Namrata and Sisti were assembling the furniture. So me and Aditya were busy in conducting our meetings in our office work, everything. They received IKEA furniture and they were the one who were assembling it just to ensure that there is no productivity loss the next day. So I believe whatever growth we have seen until now, it's because of these, committed people that God has blessed us with. So thank you, Namrata. So from my side, from Aditya's side, and of course Sristi's side, we are very thankful. So next is Arushi. So Arushi joined us from IBS College in Mumbai. And again, one of my favorite stories at Wealthy Nivesh. So we have been running Facebook marketing and digital marketing in GCC countries. MD of a sovereign wealth fund lended to Arushi. Arushi was only 3 months old in the system and she had the confidence to take the discussion forward. Only when the MD asked certain specific questions, Aditya came into picture. Otherwise, she closed the deal and the deal was Gift City, which everybody will agree is a complicated concept and product to understand. Apart from that, Arushi always brings a lot of composure, positivity to the office. As a boss, I have this attitude, people should bring positivity to the office. They should have positive things to say. So thank you, Arushi, for all your contribution. Next, founder of our acquisition team, Florence. So why I am saying founder? Because Florence was the first employee who came in our acquisition team. And she was the one who gave us confidence that yes, this work can be done. So previous to Wealthy Nivesh, I was never in acquisition role. I was always in managing relationship role. But with Florence, we got this confidence. And I'll share one story. Again, I have, good stories for all of my employees. Uh, so what I did when I started Wealthy Nivesh, I downloaded my contact list and I did a tagging that this gentleman was my ICCA client. This gentleman was my Reg Bank client. And the pitch given to them was कि सर आपके Reg Bank में RM थे. And she fixed a meeting with somebody whom I never could meet in 2 years when I was in Dubai. And she could fix it. Now he's our client. Through him, we have got 3, 4 clients. And also I use it as a case study that I believe that I have got more experience than Florence. Of course, I've got at least 10, 12 years more experience than Florence in sales only. And I failed in something that Florence could achieve. So all kudos. I think a great sense of gratitude towards you, Florence. Thank you. So next is Hitanshi. Hitanshi, so even I have 1 to 2% mistake margin. Ki I, missed to call the client. My review got delayed sending to the client. Hitanshi is the only employee on the floor जिसकी आज तक मैंने एक भी गलती नहीं पकड़ी 9 महीने में. क्लाइंट का रिव्यू चला गया, जाना था हासिल चला गया, कॉलिंग हो गई, फॉलोअप हो गया, सब हो गया. So great work culture, great work ethics. And again, as I said, we are very grateful for these people for bringing positivity on the floor. Thank you, Hitanshi. So we have got 6 people over here from Mumbai. Out of 6, 5 are confirmed employees. Akshata is the only one who is not confirmed yet because she is only 4 months old in the system and we confirm at the end of 6 months. So if she is the only one from the collection of 10 unconfirmed employees to be here, it talks very highly. And it talks very highly if she could, prove herself within 4 months of joining. That I had no doubt that whether she should be there or not. So amazing work culture again, amazing positivity. Thank you, Akshata. So when I started Wealthy Nivesh, I had this idea that I will hire a lot of seasoned bankers from the retail branch. They will join us. They will share our visions. And even my closest friends declined because of the simple traditional reason that we want to work for a big bank. You are a small firm. So even when we had funding, they were not comfortable. And one of these days, I got a call from Siddesh, with whom I had very limited interaction in last 5 years because for 5 years he was in Nigeria. Before that, he worked in HDFC Bank, Yes Bank, ICICI Bank, a very seasoned banker. And he had one single line to say to me, मैं कब आऊँ आपको interview देने. So there are certain conversations which I remember word to word, verbatim. That was one conversation. And I'll be very honest on this thing. मुझे आज भी मतलब सिद्धेश कन्विंस नहीं कर पाता कि उसने क्यों कंसिडर किया. ही कीप्स ऑन सेइंग कि नहीं मुझे वेल्थ में काम करना था, आपने अपॉर्चुनिटी दी, आपके साथ पहले काम करा हुआ था, कंफर्ट फैक्टर था, फलाना ढिमका. But I know even in wealth, he could have easily landed up in any bank basis his seasoned experience. But he joined us, and again, so he had, because he's a very seasoned resource, so he had very steep targets. He achieved it within 5 months, and he got confirmed within 5 months. Thank you, Siddesh. And another note of appreciation for Siddesh. So I told you we got a setup in Dubai now. One of the most complex transactions in banking system is foreign remittance. जब फॉरेन रेमिटेंस आता है, बिकॉज आई हैव सीन फ्रॉम द अदर साइड ऑफ द टेबल, पूरा बैंक ब्रांच हिल जाती है कि फला क्लाइंट का फॉरेन रेमिटेंस होना है. पहले से सारी फील्डिंग बिठाई जाती है, सब प्रोडक्ट वालों से बात की जाती है, सब किया जाता है. Without me getting involved, Siddesh got our foreign remittance done, which was very complex because we belong to BFSI sector. So thank you, Siddesh. Thanks a lot for all your hard work. And so now I would like to invite Mr. P. Srinivasan, a man of few words always, but very huge mathematical skills. So one of these days I met Srinivasan sir. I told him 30 years cash flows. He looked at the terrace and he was like 6.15% IRR. within 30 seconds. So that was like a, humbling moment for me because I always think I have got very good think without ink skills, but sir is a seasoned. Sir is CFO of Nosil, which is a listed Mafatlal Group company, and sir has flown in from India for this event. So thanks a lot, sir. Thanks for coming. Thank you, sir. Thanks for all your encouragement. Thank you, sir. So like they say, call me Bond. We have got Makran sir who says call me Mac. So thank you, Makran sir, for coming here. So I started coming to Dubai in my second inning of this Wealthy Nivesh. Previously, I lived in Dubai for 2 years. So I started coming in July. And I have given myself a promise that I will do 4 trips of Dubai and then I will decide. And the backstory behind it, I failed in my first stint in Dubai. I met Max sir in my first trip in July, and he came with all the documents, portfolio, everything, and he was like, "I want to start with you." Probably the reason was that we both are from IIT. I floated my coordinates in IIT group in Dubai, and since then we have been growing in relationship. So thanks a lot for your blind trust, sir. Totally believe. And looking from my side, it becomes very tough for us uh, on the morale. I don't know the term, but it becomes very difficult on us for a conscious part when client gives us money in the first meeting. Because then you know that he is doing it basis gut feeling, basis his trust in you, basis his blind support. So thanks a lot for that, sir. I hope we were able to, justify that trust. Thank you, sir. So now I have got good friend Mohit Yadav. So Mohit is a seasoned banker of Dubai, and he has been a great pillar of support for us. So great appreciation for Mohit. Certainly, so it's just a small token. Thank you. Thanks a lot. So the fact that all of you are still here shows your love and love for us. Thanks a lot. Um, so I keep on repeating this term कि we have got clients who became friends and friends who became clients. And now, it's very difficult to differentiate who is client and who is friend. Everybody is friend. And we keep on getting business basis two things. One is कि अपना लड़का है पैसा लगा दो, और दूसरा है कि यंग लड़के हैं जिन्होंने जॉब छोड़ के अपना काम शुरू किया है, वी शुड सपोर्ट देम. One of our biggest client came because of this reason only. I won't take the name on public platform. He's one of the most seasoned equity market investor of India. So you can say one level down than Mr. Jhunjhunwala. And his only point of investing with us was कि we showed him our algo, we showed him, our liquid funds research, etc. So he said that तुम नए लड़के हो, तुम्हें support करना है, I'll give you my treasury. So when I look back in last 3 years journey, I believe that we have been blessed by God a lot, certainly a lot, because I've seen failure also. So I have this humility to accept that hard work need not necessarily result into output immediately, but we have been bestowed with results very fastly. That certainly makes us conscious about our responsibility also. So thanks a lot to everybody of you for coming, for supporting us, and I'm sure we'll keep meeting through such platforms in future also. Thank you. Thanks a lot. Thank you, sir. Pleasure having you here. Did you meet my wife?
No, my wife also have been met.
No, no. Simi, come here.
Aparna.
Hello, ma'am. So I've read your name because you are also our client, but I'm getting to meet you also. That's my wife, ma'am.
नमस्कार. आप तो पूरा ऑपरेशन
Srishti.
संभाल रहे हैं.
मुझे भी संभाल दें. हाँ हाँ.
One photo, please. Yeah.